a finance or tech professional, or simply someone who wants to understand where the world of money is leading, you are in the right place today. My name is Noor Aziza. I have the privilege being your host today. Our Tech Talk is organized yearly. This year, inshallah, we have 4 series of Tech Talks. So be on the watch. We'll be advertising everywhere we can, and please, we are welcome to all our Tech Talks. For today's session, the title would be How Blockchain is Shaping the Future of Finance and Beyond. The future of finance is not just digital, it is tokenized. What began with cryptocurrency is now reshaping how value moves across borders, across industries, across asset classes that were previously inaccessible for most people. Over the 3 hours, you will hear directly from 4 exceptional industry practitioners. You will then witness a live panel discussion, and as a special highlight of this afternoon, an MOU exchange ceremony between Unimi and Satori Research, marking a new chapter in industry-academia collaboration. So let's get started. Please welcome to the stage to welcome everyone to Tech Talk. Let's welcome Professor Dr. Vignesh Nair, Unimi Interim Vice Chancellor, to give the welcoming remarks.
Good afternoon, everyone. Great to see a lot of known faces, regular faces, students. Warm welcome to all our distinguished guests, industry partners, invited guests, colleagues, students, and all of you who have been regularly coming to our Tech Talk event. It's indeed a pleasure for me to host you this afternoon for our Tech Talk, How Blockchain is Shaping the Future of Finance and Beyond. So before we begin, let me briefly give you a quick overview of Unimi for the benefit of those of you who are here for the first time. The University of Malaysia of Computer Science and Engineering, or Unimi, is a technology-focused university within the BAC Education Group. You may have seen a lot of our billboards whenever you're driving, especially in the Federal Highway and a few other locations. BAC Education Group comprise BAC College, ICT College Reliance, and also Veritas University College. So as part of this wider education ecosystem, Unimi is committed to developing graduates who are prepared for the demands of the digital economy through strong academic foundation and also industry relevance. So Unimi offers a full range of programs from foundation and diploma to bachelor's, master's, and PhD levels. In addition, the university also offers a wide range of industry-based professional courses and certification. Unimi's direction is shaped by 8 key areas of focus: Internet of Everything, artificial intelligence and intelligent machines, cloud computing, extended reality, cybersecurity, human-machine interaction, coding development and operations, and business technology. These areas reflect the technological shifts that are shaping industries and societies. They also reflect Unimi's emphasis on producing graduates who are not only technically capable, but also able to apply knowledge responsibly and meaningfully. So in this context, blockchain sits strongly within our business technology and digital innovation agenda. So today's session is both relevant and timely, as we are witnessing a major shift in how trust, value, and verifications are managed in the digital economy. Finance is no longer only about digital records, it is increasingly about digital value, and blockchain is one of the core technologies enabling the transition. Blockchain should not be viewed only as a financial topic or as a passing trend. It is part of a broader structural shift in how institutions, markets, and also societies approach accountability, transparency, security, and also trust. Its implications go beyond finance into supply chain, digital identity, compliance system, governance, and public service delivery. So many of you are in some of these sectors. You're all here today. For all students present today, I would like to emphasize that this is not about learning a new fashionable terms. It is about developing judgment. You must be able to evaluate usefulness, risk, ethics, governance, and real-world application. Technology without governance can create harm, while governance without innovation can create stagnation. So remember that always. So our responsibility as a university is to develop graduates who can operate confidently in both spaces with competence, integrity, and professional confidence. So for your information, as what MCF just now, Unima will also be signing an MOU today with Satori Research to explore opportunities for developing a Web 3.0 and blockchain education track. For those of you who would like to know more about Unimi, our programs, achievements, and ongoing activities, you are encouraged to visit our website or scan the QR code to access our monthly newsletter, Tech Byte. They provide a useful overview of how Unimi continues to grow as a technology-focused university with the BAC Education Group. This is also why Unimi values strong industry engagement. A meaningful Tech Talk is never just a one-way lecture. It's a platform where ideas meet practice, where students hear from experienced professionals, and where knowledge can be tested against current realities. I encourage all of you to listen carefully, think critically, and ask questions that matter. We are especially honored to have with us today an outstanding panel of speakers and moderators. Sincere thanks to Mr. Azhar Abu Talib, Mr. Tiong Heng Gek, Mr. Ranjit Singh Gill, and also coming is on his way now, Dr. Mufti Yusuf Sultan, for sharing their expertise and perspective. I would also like to express our appreciation to Unimi's Professor of Practice, Mr. Tile Raj Ramanathan, our moderator, who will be guiding us throughout the session today. Their combined experience across blockchain, infrastructure, investment, governance, research, and Sharia-related perspective will help us develop a more balanced and informed understanding of where blockchain is useful, where caution is needed, and what responsible implementation should look like. Before I close, I would also like to highlight one meaningful aspect of today's event. In honor of each speaker today, a contribution of 300 ringgit per speaker has been made by Unimi to uplift in support of the 1 million devices campaign. This contribution will help the refurbishment of laptops to Form 4 and Form 5 students in Malaysian government schools, thereby reducing the digital poverty and supporting the next generation of digital leaders. It also reflects our shared commitment to the Help Put Every Malaysian Child Online project led by Unimi and BACOM to assist the Orang Asli community. So we are currently setting up a series of Balai Belajar for these kids. So these projects is a gesture, but it reminds us that technology should not only drive innovation and economic value, but also expand opportunity and inclusion. So to close, thank you to the hardworking organizing team and the Student Representative Council, our partners, our speakers, our moderators, and also participants for making this event possible. Most importantly, thank you for taking your time in this fasting month to be here for a good purpose and also for your own curiosity to understand what blockchain is all about. With that, let us begin with the event. Thank you so much.
Thank you, Professor Vik, for that welcoming remarks. Next, let's just dive into our speaker's presentation. Our first speaker leads product and market development at one of Malaysia's most recognized fund management houses, Kenanga Investors Berhad. He brings over a decade of experience in finance with 8 years in investment banking across corporate finance at Kenanga Investment Bank and Affin Hwang Investment Bank. He holds a Bachelor of Commerce in Accounting and Finance from Curtin University, and today he will share how the capital markets and wealth management industry in Malaysia is approaching tokenization and digital assets. Ladies and gentlemen, please welcome Mr. Ranjit Singh Gill.
Goodness, I remember being on that side of the floor some years ago. How things change. Before I begin, I'd like to start with a question. How many in this room today, in the last 1 week, how many of you have sent money using Grab, Touch 'n Go, Bank, etc.? Oh, since we have quite a few students, I think the next question will see more hands. How many of you have received money from Touch 'n Go, Bank, etc.? See, we all use these rails. We all use the financial system. But how many of us actually understand how the money moves? And I don't mean the experience of using the app. How many of us understand how the money moves? Reconciliation, the clearinghouse. Nobody, right? Not many of us do. And that's not a criticism, but that really is the point. The point is financial infrastructure is invisible, and the blockchain is here to transform that. So over the next half an hour, let's see how we're going to spend some time. I'll tell you a little bit about who I am and how I came into this space. Now, I don't like talking about myself, but I think it's important for you to understand where I come from, to get a bit more context as to why I think what I think about the blockchain. And then we'll dig a little bit into Project Juara, which is a report that we co-wrote with Tiong, Satori Research, and a few other partners, that looked at the opportunity ahead of us in the space of tokenized financial assets. And then I'll talk you through what we've actually built here at Kenanga Investors. How we took our traditional financial investment products and we put it on the blockchain. And finally, this is the part that I care about the most. This is what I'm most passionate about. How this translates into something for you. What this means for you. And how you, as people entering the workforce in the very near future, can prepare for this moment. So very quickly, who am I? I ask myself that all the time. My name is Ranjit. I work at Kenanga Investors Berhad. We are a part of the Kenanga Group, which is Malaysia's largest independent investment bank. And my work sits at the intersection of traditional finance, of asset management, of digital transformation, and now the blockchain, which is a fancy way of saying, look, I think about the business and try and predict what's going to happen tomorrow, and I try and do it. I spend a lot of time thinking about how we can do things more intelligently and more efficiently, but I didn't start here. I came up through the ranks of very traditional financial services. I did the very basic groundwork of corporate finance, of investment banking, sitting there writing prospectuses, drafting memos, and piece by piece, I got a bigger and bigger and bigger view of the financial system, of how markets work, how finance operates. And in all this time, I looked at how we do things. I looked at how finance is run, how banking is run, and I thought, that's fine. It works. Settlement takes 2 days. It's okay. Your money will get there eventually. Someone wants to invest into a fund. Okay, we take your money today, you'll get your fund units in 2 days' time. All right, not a problem. Then I started to understand the blockchain. I started to understand that beyond the speculation, beyond the big ups and downs of Bitcoin and Ethereum, the blockchain is actually infrastructure. It's enabling infrastructure to allow us to do what we want to do a lot more efficiently. And then I started to appreciate that the idea that, okay, it will happen eventually. I remit money today, in 2 days' time someone receive it. They'll get it eventually. Eventually stop being good enough. Eventually is not good enough when you're talking about trillions of dollars, of ringgit, of whatever currency you care to name, floating in the financial system. Settling at T+2, looking at reconciliations that take so much longer to do. Still dependent on intermediaries, still dependent on someone between me and the person I want to send money to. 2 or 3 layers in between. Not good enough anymore. So the system is not broken. The system is just slow. It's inefficient, and it's exclusionary in ways that we really don't spend enough time questioning. And blockchain answers all of this. So why? That's where I come from. That's where I have arrived at these views that I'd like to share with you. But the question is why? Why does this matter? Let me give you 3 numbers that I think illustrate the story of today's financial infrastructure. I've mentioned a few times before, T+2. Now, what does that mean? Today, if you buy shares on Bursa, the trade settles in 2 business days. The person that's selling the shares to you over the market gets their money in 2 business days. That means 2 business days of limbo. Things are in transit. You don't have the shares. They don't have the money. The bigger number is this. I think in the US market, there are estimates that this 2-day window creates a systemic risk exposure of $50 billion every day. That is the money that's out there, the money that's floating. 2 days, $50 billion every day is floating in 2026. We're still living with that. The second number I'd like to share with you, excess, 6%. On average, that is the cost of sending remittance, to remitting money from one country to another. On average today, 6%. Now, being a bit cheeky here, but I know we have merchant trade in the room. He's laughing at this. But the fact of it is, there are people back home in their home who are depending on this money. The World Bank tracks this. For Southeast Asian migrant workers sending money home, they send 1,000 ringgit. They work hard for that 1,000 ringgit. 60 ringgit goes to the intermediaries. You have to think, is that a good use of capital? Is that a good use of the time that they have spent working? So a significant chunk of that disappears in fees and forex spread, etc., etc. The blockchain, as it stands today, is already saving every year $1.2 billion in remittance fees. Now that's real money. That's real money ending up in the pockets of the families back home. That is real translation of the earning employee's labor into something that his family can use. And the third one, 1.4 billion people. That is the number of adults today around the world who do not have access to banking. They don't have access to basic financial services. It's not because they're in the wrong place. It's just because there's no documentation. They may not have credit history. They may not have minimum balances. Now, the blockchain can actually start solving some of these pain points. It can start serving some of these people because you don't now need a branch anymore. You don't need to do a credit check anymore to send money. So when I talk about the blockchain, when I share my views on the blockchain, it's not because token prices. It's not because Bitcoin crossed $110,000, $20,000, etc. It's really not that. The idea behind the blockchain is the plumbing of money is very, very important, and today, that plumbing is leaking. The blockchain will fix that, and we are trying to use the blockchain to fix it. Which brings me to the second part of my presentation, Project Juara. Some of you in this room may already have heard of Project Juara. It is a white paper that I mentioned earlier that we co-wrote with Satori Research and some other partners. And its intention was very, very simple. Its goal was to establish the market reality of tokenization and tokenized financial assets in Malaysia. This is not an abstraction. This is not a fanciful idea. This is about what's real, where the opportunities are, and where this is going. And in the course of the research, let me tell you what we found. Malaysia has several structural advantages. We have a sophisticated regulatory environment. We have very forward-looking regulators. We have a large Islamic finance ecosystem. We are the largest sukuk issuer by far. And we already have a head start that many of our neighbors have not had or have taken a lot longer to build. So the question is, asset tokenization, it was never a question of whether it was coming. The question was, when is it coming? The other question is, would Malaysia be ready when it arrives? Answer's coming up, but just to share a little bit more, the word Juara means champion in Malay. Most of you would know that. And it's not because we wanted to become Jago Kampung. It's because we really, really, in Malaysia, have a chance to become a regional champion. Not just a sandbox leader, but a thought leader, someone who's really pushing the markets forward. And based on all of that, what did our research find? We estimate that by 2030, our tokenized asset market could hit 43 billion US dollars. And to put that in context, by the middle of last year, the global tokenized real-world asset industry had already hit $25 billion. Now, that is 260% higher in the first half of 2025 alone than it was the year before. And the forecast for the global market vary. McKinsey puts it at $2 trillion. BCG put it at 9.4. Standard Chartered, a lot more optimistic. They expect that by 2030, the global tokenized market will be worth $30 trillion. Now, this range is so wide because no one really knows where this is going to go. But the fact of it is, by our estimates, we are looking at 43 billion in the next 5 years. And we know that this is not speculative anymore. BlackRock, the world's largest asset manager, launched a tokenized money market fund in March. And in less than a year, it grew to $3 billion in assets. JP Morgan's own money market fund, they've started that on Ethereum. They put $100 million in. Franklin Templeton, they launched Benji, which is like the land tokenized market fund issuance. They've crossed $600 million. Now, this sort of growth is taking place at a pace of 85% year over year, which essentially means that this is not a space for Bitcoin enthusiasts anymore. This is not the space for your Dogecoin, your NFTs. This is real. You've got huge, huge financial institutions backing this, promoting this, driving this, and really spearheading the innovation in this space. So allow me to say this. This 43 billion figure that you're looking at, this is not a moonshot. This is not some big aspiration out there. This is real. This is happening. And more than that, it started. We started it. So where's the 43 billion coming from? Now, of course, being an asset manager, I would say that the nearest term opportunity is in unit trust funds. And we'll come back to this when I share what we have done in this space. And of course, the medium-term play, you're looking at bonds, sukuk, so corporate bonds, government bonds, sukuk, and that forms about 78% of the market share. And this is because tokenized fixed income products are a very, very natural fit for adoption on the blockchain. Then you have unit trust, we'll come to that later, and then you have other asset classes as well. You get private equity, you have venture capital, you have private credit. These are all greatly enabled by the tokenization on the blockchain. But when you look at these spaces, then you start to look at product market fit, individual investor suitability, etc. But the key insights from this report were very, very simple. And it surprised us. I think Tiong may share in this surprise as well. It's like the barriers to entry in Malaysia are not actually technical barriers. The technology exists. It is there, it's ready. Stellar, Ethereum, Polygon, these are all production-ready networks, and we have talked to all of them. The barriers are really a lot simpler and a lot more human. Things like regulatory clarity, market infrastructure, and institutional trust. You need the regulators to believe in this, you need the public to believe in it, and you need the practitioners to believe in it. Now, when these three different groups intersect and align, that's where you start to see the real adoption, because technology is the easiest part to solve. And in all honesty as well, as we look at how we get to that 43 billion, I can tell you the regulators are looking at this very closely. The Securities Commission, Bank Negara, they're working on this all the time. The stock exchange is looking at this, banks are looking at this, asset managers are looking at this. So it is only a matter of time before all of you here start transacting your daily finances on the blockchain. You imagine instantaneous settlement of money. You want to send money back home, you want to receive money from home, instant, you don't have to wait 2 days. And I remember being in your position. I remember studying overseas and my parents were sending me some money, and with the public holidays and the weekends and checking my bank account, when is this money coming in? I got to pay rent, I got to buy some noodles, etc. All of those problems, gone. It will take time, but the rails are there, the infrastructure is there. It's now a question of the industry and the users starting to believe in it and adopt it. Why Malaysia? I think Malaysia has some unique opportunities that other countries may have differing levels of. The first is we have a very mature regulatory framework. Now, being a Commonwealth country, we had a head start. We inherited a lot of good, solid regulations, and we have continued to build upon this. We have very mature mindsets among our regulators as well. If you spend time at the Securities Commission, you spend time with Bank Negara, they have struck a very nice balance, in my view, of being forward-looking, but also continuing to discharge their obligations of safeguarding the markets. The SC was licensing digital asset exchanges in Malaysia before most other countries even thought about having a framework. And this matters. Secondly, another key driver is we do have a world-class Islamic finance market. Perfect timing, actually, welcome. We have a world-class Islamic finance market. We are the largest issuer of sukuk around the world. And again, Islamic finance, you will hear more about this later. Islamic finance is a perfect ground for tokenization for the blockchain, for reasons that you will actually be surprised to learn later. Islamic finance has huge demand for alternative structure, for data granularity, for traceability, accountability, and verifiability. So the blockchain is perfect for Islamic finance. It's a perfect natural fit. And third, political will. I think the Capital Markets Master Plan, which I'm not sure how many of you have read, came out on Monday, explicitly names tokenization as a priority. So the SE is not ignoring this. The regulators, the government is not ignoring this. They're racing to get ahead of it, and they're trying to drag everyone with them. Or maybe it's the other way around. We are trying to race ahead and dragging them with us. I'm not sure. So when people ask me, right, Ranjit, why Malaysia? Why is Malaysia the right place to do this? I say, look, the regulator is constructive, the legal infrastructure is there, the rails are there, the banking network is there, the technology is there, and the market is sophisticated enough. All of you are sitting here in this room, which means that you are interested enough to know about this, and you're more likely to start adopting it when it becomes available. So these are all differentiators that I think other countries have to varying degrees, but we have, to me, the ideal mix of all of these factors. And of course, let's not ignore we have a very young digital native talent as well. We have very intelligent, very hungry, very driven, dedicated, committed youth who are looking at the world around them today thinking, all right, how do I do this? How do I go out there and change the world? So after all the hyperbole, after all the puff, after all the notional stuff, let's get real for a moment. Right? What does tokenization actually change? I've laid out here the before and after, pre and post tokenization. So the first leg is actually quite obvious, settlement. Tokenization offers near instant settlement of your financial transactions, where things used to take 2 to 3 business days. You can do that atomically. Thanks to the way smart contracts can be written and rewritten, how programmable finance is starting to look. You can start fractionalizing. So before this, if you wanted to buy a bond, you need 50,000, 100,000 ringgit. We can reconfigure the smart contracts, and through some structural engineering, we can actually make these access points more like 10 ringgit, 50 ringgit. We've seen that in Thailand, we've seen that in the Philippines, how they make previously inaccessible finance much more accessible. And what tokenization also allows you to do is to start thinking about liquidity. Because previously, you put your money in, the assets are stuck, you'd have to wait X period before you can get your money back. But now, using tokens and using the secondary markets that you can build around the tokens, you enable liquidity, you enable access, and you enable, again, the speed of the settlement. And by its very nature, the blockchain promotes, encourages, and facilitates transparency. Now, transactions that take place on the blockchain, you cannot change them. They're all documented, they're all verified. I'll tell you, even with our own tokenized funds, I can actually get on the Stellar blockchain and start looking at all the transactions. How many tokens were minted? How many were burned? When? Who? Why? All of this is transparent. So, transparency in finance means so much. And the blockchain records every step. The cannot be changed. It cannot be immutable. It's immutable, unchangeable. Which means that audit becomes a lot easier. Your back-end processes become a lot easier. And for people who have slightly more nefarious intentions, I think you probably have to think twice as well. The MACC is getting very good. I think the blockchain may make it easier for them to do their job. And of course, cost. There was a time when if you wanted to send money overseas, you needed to deal with the sending bank, the receiving bank, the intermediary, pay the SWIFT network, you add layer and layer and layer, and you end up at the 6% fees. Now, what if you could go direct? What if you could just ping a token across, work out your on-ramps and off-ramps, and use technology to actually bring down the cost? Because what is the nature of all of this? Beyond the coins, beyond the chain, etc., what is the blockchain? It's sending information. Right? You're sending packets of information. Why should sending packets of information cost you 6%? So, based on all these benefits, all this research that we had done, what we decided to do at Kanaga was to make it real. And instead of waiting for perfection, for things to be ideal, waiting for the ground to be ripe and fertile, etc., we took a punt, we went in, and we tried to build something that nobody had actually really thought about building before. And I'm very proud to announce that 2 weeks ago, we officially launched Mira. Mira is our fund tokenization platform, and that coincides with the launch of Malaysia's first tokenized money market funds on the Stellar blockchain. We did that 2 weeks ago. But we did not start there. We started in 2021 when the Kenanga Investment Bank acquired a stake in tokenized exchange. And it was the start of the journey because then we were looking at how are digital assets, how is Bitcoin traded in Malaysia today? And as a stockbroking house in Malaysia, how will that impact the way we do our business in the future? So we put skin in the game very, very early on, and last year we co-authored Project Juara. I've mentioned this a few times before. It's available online if you're interested to read. And then we identified a trend, but instead of just following the trend, we decided to map it. So together with some really, really excellent partners, we launched Menara 2 weeks ago, a first in the country, and it is a foundational building block for where tokenized finance in Malaysia can go next. Menara doesn't just tokenize funds. Menara allows us to tokenize just about any real-world assets. And as the ecosystem develops, as the market develops, as regulations develop, the platform is already scalable that we can start tokenizing other instruments moving forward. So we have built for tomorrow today. And we are actually taking steps towards this tomorrow. So where do we go from here? I think we'd be looking at tokenizing bonds, tokenizing sukuk. There are a variety of real-world assets that we would like to tokenize. What we would like to also do is start introducing the higher order benefits of tokenization, such as instant settlement, fractionalization, 24/7 trading. We are looking to get very quickly to a point where you don't have to wait for the bank to open, you don't have to wait for the weekend to end. Anytime you want to send money, receive money, make a payment, the tokens will make that happen. And we are making our way towards that. Let me spend now a bit of time talking about the Menara platform again. This is our token platform. We built it on the Stellar blockchain. And we chose Stellar very, very deliberately. I'm not sure how many people here are familiar with Stellar, but they today power some of the largest tokenized financial asset issuances in the world. In 2025, Stellar processed 3.6 billion transactions, and today they have, I think, carried out 21.5 billion operations on the blockchain. And since they were launched, they have maintained a 99.9999999% uptime. Another way of saying this is, in all this time that Stellar has been running, they've only been down for 1 hour. The average fee for operation on Stellar is, okay, let me see if I have this right, 0.0007 cents every transaction. Now, remember the 6% from earlier. This is the kind of cost savings that we're starting to look at. Payment volume on the network hit 55.6 billion last year. Again, as I mentioned, Franklin Templeton, their fund runs on the Stellar blockchain. They have over $580 million in assets under management. PayPal launched a stablecoin. They're running on the Stellar rails as well. Fourth largest stablecoin by market cap in the US. So all of this is to say that we chose the Stellar blockchain because we wanted to bring the best to the country. We wanted to enable our tokens, run them on the best possible blockchain that were designed for financial markets applications. So on Menara, together with the launch, we launched 2 tokenized money market funds, the Kenanga Money Market Fund and the Kenanga Islamic Money Market Fund. And the structure is very simple. 1 token corresponds to 1 unit in the fund. You get the same legal rights, you get the same economic exposure. There is no specific layer, no other wrapping between the token and the fund. If you hold a Menara token, you are automatically qualified as a unit holder, as if you really bought the units, because we have duplicated the entries across the different ledgers. I won't get into the technical aspects of it, but essentially what I'm trying to say is this matters. We are not doing crypto speculation anymore. I'm not giving you a coin that's going to go up 30% tomorrow and drop 40% the next day. This is real. This is real regulated money market funds, authorized by the SE, available on the blockchain. Now, this distinction the entire reason we're doing this. So now that we've launched these funds, where do we go? I think I see the future across 3 horizons. The first one is today, money market funds are live. We are proving the model. We are building the compliance. We have established trust, or we are establishing trust anyway. And then Horizon 2 is in the nearer term. We would like to start tokenizing corporate bonds and government sukuk. And we would also like to widen our tokenized initiatives to a larger institutional class. So we want to broaden institutional participation for the simple reason that institutions move a lot of money. Institutions need to manage treasury funds. Institutions have supply chains to worry about. Your corporates, they need to pay suppliers, they need to collect from customers, they have to manage the cash. The atomic settlement of the blockchain makes this so much easier, so much more efficient. And Horizon 3 is the full ecosystem. That is my moonshot, that is what keeps me up at night. How do we tokenize real estate? How do we tokenize infrastructure, private equity, carbon credits? How do we create this entirely new financial ecosystem that runs on the blockchain to make everybody's lives easier, to make it so much more efficient, to degrease the process such that efficiency is not something we even have to think about anymore. So we are at the very, very beginning of this journey, but the beginning is the most important place to be. And that brings me to the part that I feel the most passionate about in talking today, which is, what does this mean for all of you? I see, again, you remind me of myself many years ago. I think that many years ago is probably more than your ages today, but what does this mean? Look, you're all graduating at one of the most interesting points in the financial markets and one of the most interesting points in history. With things like AI, with things like the blockchain, the world is changing, and the pace at which the world is changing is really fast. You're going to be graduating at a time when all these technologies are landing, are hitting, are implementing, and you will have a hand in building all of these technologies. I graduated during the global financial crisis. Different. This is really, think about the last time, right? The last time financial infrastructure, the last time finance truly changed. I'm not sure how many of you know this, but most of the back-end software that powers banks today is 50 years old. 50 years old. And what they have been doing is they have been overlaying. You want to create an online banking app, you just add something on top. You want to create this other functionality, you add something on top of that something. You keep stacking and stacking and stacking. Everything runs on a 50-year-old architecture. But today, all of that is poised to change. All of these systems were built decades ago. The people who built these systems were once as young as you were, and they were looking at a world that's full of potential to change, which is where you are today as well. They had their well-compensated, influential careers, and I think you will have yours as well. So, tokenization, it's not an app update. It's not a system update. It's a major re-engineering, a re-plumbing of where financial infrastructure is. And we are at the space where the people who truly understand this space are scarce and they are in high demand. What does that mean for you? You are sitting in this lecture room today hearing all of this. You could leave this lecture room and become one of those rare people. It's hard to find, I know, the motivation before the opportunity is obvious. But today, the opportunity is not obvious to most of you. And that's why I'm here to share with you what that looks like. So what does a career in this space actually looks like? Let me be specific. If you were looking to take up or to start a career in this space moving forward, you have a few opportunities available to you. On the product side, I think we need product managers who understand the financial and the regulatory environment. So you need to understand fund structures, you need to understand licensing, you need to understand AML requirements, because someone who understands the technology without the market won't be able to do the job. And someone who understands the market but doesn't get the technology will not be able to do the job. If you can do both, you are going to be in such great demand moving forward. And the same goes for the legal and compliance side as well. So SE, they will come up with their regulations and their guidelines. Bank Negara will do the same. Every institution that's looking to deploy in this space will need someone who understands both. You have to understand the law. You have to understand guidelines, regulations, policy, and you have to understand the technology. So I mentioned Stellar earlier. One thing you might find is Stellar operates, runs, developed the blockchain. Their head of legal used to work at the US Department of Justice as a prosecutor. Understand legal, figure out the technology. Or figure out the technology, understand the legal. Whichever order you choose to do it, you need to have both. The same goes for the operations side. If you understand fund operations, if you understand smart contract auditing, token lifecycle management, etc., these are new operational roles that did not exist 5 years ago. These are opportunities available to you as well. Finally, of course, development side, the investor education piece, the institutional business development, the partnerships. You have to understand, yes, the blockchain, yes, tokenization, but you also have to understand all these other parts of the business as well. So we are at a point today where just as the technology is enabling efficiency in the markets, at a very, very foundational level, your understanding of finance, law, of economics, your understanding of regulations, guidelines, policy, etc., all of that has to be there. But your understanding and your appreciation of the blockchain and tokenization is really what's going to help you along. It's going to make you part of that elite selected class that institutions are going to be chasing after because no one else can do it. So, what to do? There are a few concrete steps that I think you can take in order to get yourself ready for the workplace of the future. Firstly is to understand the regulatory layer. So the SE has published guidelines on digital assets. They will be publishing more guidelines on tokenized financial assets. The regulators are constantly putting out white papers. We are putting out white papers. Take the time, go read them. Understand what a recognized market operator is. Understand what a digital asset exchange has to do in order to get licensed. This knowledge doesn't cost you anything, maybe an afternoon. But it makes you more informed than 90% of the people who will be applying for the same jobs that you're applying for. Second, get hands-on, right? Get involved at least at a very small scale. Open a wallet, acquire some stable coin, try the platforms that you get access to. Use DeFi protocols, just small amounts. Just put in 10 ringgit here, 50 ringgit there. This tactile, hands-on understanding of how things work is irreplaceable. It places into context everything that you're learning in uni, and at the same time, everything that you are learning in uni starts to inform how you think about this product you are using. And number 3, understand, read primary sources. Project Juara, it's free. BlackRock, Franklin Templeton, European banks, CoinDesk, the block, they're all putting out research all the time. They're all sharing white papers, they're all sharing best practices, etc. Go out there, read all you can. The US came out with regulations, read that, put it all in your ChatGPT, your Gemini, your Claude, just put it all in there, start digesting, start understanding. Because this takes maybe 15 minutes a day, but if you do this every day, you keep your finger on the pulse of the market, that knowledge compounds. By the time you're ready, out there looking for work, you will have a head start that most people probably will not have. And finally, what I'll say is the digital asset community in Malaysia is pretty small. It's very tight-knit. There's a few hundred people maybe who are genuinely working in this space, which means that you are maybe 2-3 connections from someone in this circle. So use your LinkedIn, use your Twitter. Actually, I don't know what you guys use these days, but just use your social. Go out there, network, meet people, figure out who's in there, start talking to them, get yourself involved in these spaces, even if it's to sit and listen exactly as you're doing now. Start. Start, because I don't know when graduation is for you, but the world is not going to wait. Get yourself ready, get informed, get connected. It's not an exaggeration. The pace of change is happening so quickly. You're all young, nimble, agile. Your brains work a lot faster than mine. So go out there, get prepared. Get prepared and get marketable. So I'd like to close by sharing just a few wrapping up thoughts. I think the infrastructure of the world tomorrow is being built right now. It's not 10 years away. Project Juara, I know we talk about 5 years from now, but the building blocks are being put in place today, here in KL, in Singapore, Tokyo, San Francisco, New York. You guys in the room are going to be in the workforce. You are going to be the builders, the engineers, the operations people, the finance people. You are going to be in the thick of action when we hit that $43 billion opportunity. Some of you will help us get there. And I hope you decide that this is worth your time, attention, and effort. So stay curious, read the white papers, and most importantly, ask the stupid questions today so that you can sound smart tomorrow. Don't be embarrassed. The people in this space, everybody in the front row, are overwhelmingly generous with their knowledge, and I suggest that you tap it. They also need people. So that brings me to the end of my presentation. Thank you so much for your time, your attention, and I hope you enjoyed the other presentations as well.
Thank you, Mr. Ranjit Singh, for that insightful session. Definitely, it was a truly insightful 30 minutes presentation and very helpful and useful to our students. Next, we come to our second speaker. He's a Malaysian technologist who has spent over 26 years at MIMOS, Berhad, Malaysia's National Applied Research and Development Center, and now he serves as the CEO of My Blockchain Infrastructure, Sendirian Berhad. He has delivered technology solutions for some of Malaysia's most critical government agencies, including the Royal Malaysia Police, the Ministry of Finance, the Immigration Department, and the Ministry of Health. He holds a Bachelor of Science in Computer Science from Ohio University, has authored peer-reviewed papers on trusted computing, and holds patent in cryptographic methods and secure platforms. His work today focuses on verifiable credentials, and sovereign digital identity and blockchain-anchored applications for public services and national infrastructure. Ladies and gentlemen, let's welcome Mr. Azhar Abu Talib. Oh, I talk here. Okay. Shall we invite our third speaker instead? Okay. Let's introduce our third speaker. Mr. Azhar just gone off to the restroom. Okay, our third speaker, ladies and gentlemen. He brings a perspective that very few can offer. Okay, Sheikh Azhar. Okay, let's welcome Sheikh Azhar.
Sorry if I keep pulling my trousers because I'm losing weight because of Ramadan. Anyway, there's one thing in common between my organization and Unimi. It's because of this fella here. And that's the reason why I decided to actually give a talk. But anyway, so why there's a lot of logo, let me explain first. Where I'm from an organization or an entity called My Blockchain Infrastructure. So the next logo after that, on the left, is basically an initiative, the logo initiative of Malaysia Blockchain Infrastructure, initiative started by Ministry of Science and Technology. So we are actually an entity, a subsidiary company under the MIMOS, where Raj is before. And MIMOS is, if you don't know, is part of Ministry of Science and Technology. So the idea today, what I want to, actually I have no idea what I want to talk today, but I decided, okay, because for us, a lot of the blockchain work that we're doing is non-finance related. But I'll take a crack at first understanding the concept a little bit, so at least you guys know what's this finance of the future is going to be, for what the title is all about. And then the second one is challenging you guys. So like the previous presenter, Ranjit has mentioned, that you guys here are going to be the leaders of tomorrow, right? So let's challenge a few assumptions from that, from understanding of the basics. And from there, let's take a bit about what I'm doing from the data point of view. So let's start with introducing what this entity is. Basically, we started from an initiative of Ministry of Science and Technology. So it's a roadmap that they have crafted, basically, Raj and the team have crafted in 2021. So back then, I'm not doing blockchain yet. So it's coming from the Ministry of Science and Technology. So there's a roadmap 5 years plan. And from there, give birth to where I am today. So, and the idea for that is we are not doing blockchain DeFi kind of stuff. We are only doing the things that are related to the technology where it can be applied for government of Malaysia. So that's where we are. So what's the journey like since was there and all that? So it took 5 years. This is how government of Malaysia works. So, so now you know, for those of you who never work in the government. So it started from the roadmap. This is where the roadmap is produced by Ministry of Science together with a few researchers in MIMOS. So they founded this roadmap. And after that, then there's a lot of workshop happening in between. There's a lot of committees and all that. Then from that particular workshop, there's a creation of something called Malaysia Blockchain Infrastructure. That's where the first mention of this particular initiative. So that's in 2022. So after that, then there's a lot more workshops and a lot more hubs and all that. We government love to do that. And in 2024, only then, the government decided that, okay, somebody needs to run this, somebody needs to operate this. That is where government says, MIMOS, please do this, right? So it's only then the formation of my blockchain infrastructure came into picture. And only recently, I think it's in March, it's actually in July last year. And then launched in 2025 by the minister, and our minister is part of something called the Digital Asset Committee. So the Digital Asset Committee is actually chaired by the Prime Minister of Malaysia, and also I think the secretary is, if I'm not mistaken, is the Ministry of Digital, where SC is the member, and also Bank Negara is a huge member, part of that committee also as well. So what do we do, basically, in a nutshell? So the idea is, after a lot of workshops and all that, the industry players says, please, government of Malaysia, do not compete with the current existing industry of the blockchain ecosystem. So then the government thinking, and then when it came to us, and then so what do we need to do? So what we decided to do is build a national fabric or coordination and orchestration layers so that all this ecosystem can work together. That's the main agenda. So today, if you have, say for example, I think previously, I think Mr. Ranjit mentioned there's something, a network called Stella. There's other form of networks also. You've got Ethereum is another form of network. You got, so different networks. We've got local players, Marsverse, with Marschain, that's another local players. Our major partner is Zetrix, so they run a Zetrix chain, which is another ecosystem of infrastructure. So when you decided to pick one of those, so the previous presenter mentioned about Stella is because Stella is designed to work with financial type of instrument. So when you decided to actually pick one of those networks, so you basically tie yourself within that ecosystem. So this is where we decided, okay, is it possible to create an ecosystem where everybody can play together well? There's an interoperability layer there. Then you have to figure out how things can be migrated or needed to be migrated at all. And you need to create all the set of APIs that works with all those ecosystems that you decided to work with, and also the type of smart contracts they are running on. And they have got a few running on different smart contracts then you decided when you choose this particular ecosystem. So those are the things that we need to handle. So, but like I mentioned, so that's basically about the entity. We'll come to back later. So the idea today, we'll start with the baseline first. From there, we define a little bit how asset become a value in society. From there, we have a starting point to say, then how is it different between a physical asset and actually a digital asset? Or is there any different at all, right? So then, let's challenge that assumption a little bit. Let's do a paradigm shift. So the question is, this is where you guys come in. You do a lot of research and all that. If you want to partner with us, not a problem at all. So the idea is, can you challenge with the current set of technology the notion of the current way of how money works? Can we do that? And the third portion, this is where I will explain what we're doing also a little bit. How then in this ecosystem, whether it's blockchain, it's not blockchain, where data plays a key role, but not just any data, trusted data. So what's the difference between normal data and trusted data? We'll try to cover that. Hopefully we can do this within 20 minutes. If I'm not mistaken, I'm given the time of 20 minutes. So let's start with this first. So value does not, so let's talk about asset. A simple asset that we know is physical asset and all that. Let's not talk about money first. But the normal asset, it can be any type of asset. It can be money also. But anyway, if you talk about asset, but where does the value of the asset comes from? It comes from this. It comes from either the asset has some form of utility, right? You need to use in your daily activities, so there is economic activity around it, right? Or the asset has some way to generate income, or the asset itself is very scarce, it's hard to get. This is where you got precious materials, those kind of things. Or you can use the asset to actually get more money, so you can use it for collateral purposes, and the asset must be accepted widely. So this is basically, can we agree on this? Unless you don't agree, then I cannot move forward. Can we agree on this? Okay, we can agree on this, right? So it's basically roughly what we feel when we say, I own something, and these are roughly, it says the value of the thing is defined by all these economic function, right? By the way, I'm not a lecturer, so I'm not lecturing you guys. We will be challenging this norm later on. So in order for an asset to have a lasting impression, what do they need to have as an economic function? So, like I mentioned, it has to have a use which will require participation of everything, right? So then it has to be part of our daily activity. We have to use this, right? And it has to be widely used as also for settlement, and it has to create some sort of solve some sort of economic problem and represent scarcity. Okay, so if, say, for example, right, if the asset does not actually have this economic function, right, what does it falls into? So it's might be speculative. So why do I say this? Okay, let's start with the evolution of the first crypto that we all think we all know, which is Bitcoin, right? So we're transacting Bitcoin. Yes, it's an investment. I mean, at first it has no value. Then somebody, because if you know the history and all that, because with certain people on Reddit and then decided to transact pizza with it and all that, if you know the history and all that, suddenly it has value. Now today, it has value in the form of investment, but when you talk about Bitcoin today, does it really have, and other than for any real economic value? Not there yet. And why? Because it has no function economic element yet, at least from my point of view. That is where it becomes speculative. So it's an investment, but it's speculative. So that's where you see one day it goes, like what Ranjit mentioned, 3%, and tomorrow it's like down 40% and all that. You just don't know. That's what speculative means, right? So from there, if you see traditional asset and digital asset, right, there's not much difference, right? There's not much difference. So both of them represent a claim of something, right? From ownership, from a view, it has a for traditional asset, you have a legal ownership. From digital asset, it's cryptographic. It's still ownership, but you define it into some form of mathematical function. So the way you do physically, I mean, at least previously, you can transfer it to physical. I can transfer the money and all that. So, but for digital asset, it's transferred on a chain. So it's very similar. So the scarcity is controlled by protocol of rules for digital asset. But here it's by the law itself or some sort of issuance control. And there will be some entity who will actually managing those asset itself, either some bank, land office, and all that, right? So in a digital asset, it's actually a ledger. So in a sense, it's not much of the difference. So there's a lot of similar analogy and all that. So, and at the end of the day, the idea, like I mentioned just now, what we want to arrive is the economic portion of it, right? So this is the, I think, mentioned by the previous presenter also just now. So this is the difference part of it. It's not a problem. So traditional asset is actually backed by institution. Digital asset is backed by some network, in this case, some mathematical protocol and all that. The custody held by banks or some custodian normally. So digital asset is not me, you yourself is actually managing it. So settlement speed is being mentioned just now. Programmability, we'll talk about this later, about programmable. Not all digital asset can be programmable. Programmable arise because of basically innovators like you and me trying to define, at least from my point of view, an economic function for the asset. So we'll talk about this later. So, and then the enforcement in this case is through the laws and the court, and the digital asset is through the protocol. So if you look at the idea of smart contracts and all that, okay, let's touch on this first. Before that, let's go to this. So how does you think arrive from the idea of transaction, just value on a ledger and all that, from Bitcoin type of ecosystem to something else that's where you call today a smart contract? So the idea is simple. The idea is you want to create, just now we mentioned just now, right? You need some sort of utility, right? You need somehow utility, but that utility does not exist in the normal world, but it exists in the digital world. So what is the concept of that particular utility so that we can create an economy around it? So what is that? Anybody try to venture a guess? So Bitcoin is just numbers. Bitcoin is just some value A to any and all that. That's it, right? So how does the introduction of smart contract creates that utility? Because there's a form of some digital that we are using today, I mean, at least also during that period of time, to introduce some sort of economic function that exists only in the digital world, but does not exist in the physical world. Huh? Define the concept. What's the concept? So before the arrival of smart contract, in the form of blockchain ledger, you only have just value, right? Alice and Bob transfer this money, Bob to David, transfer that, that's it. So what's the originating idea of the smart contract, which I feel is needed to create that utility value, but it's only existing in the digital world. What is that? It exists today, and it exists during that time also. Today, what is it? What are two things that you need to do in digital world that is needed? If you don't have those two things, nothing runs on the digital world. Don't think of a physical thing. Think something in digital. What are the things that they... What is it? So, you're almost there, almost there. There's two things. What are the things you need? Code is there, almost correct. Compute and storage, right? Compute in storage. Everything that runs in the digital world, you need some sort of computation, right? Then after that, you need some sort of storage for that computation that you're trying to do, right? Those two things that are needed, right? So imagine me trying to create an economy, right? A new economy for a economy that needs to utilize this value, like the blockchain that you have previously with Bitcoin and all that. But you want to create something over that people can use. That's where compute and storage comes into the picture. And that is why that smart contract become the bridge for a utility type of chain. So what does smart contracts do? Two things. Compute and store. For what purpose? For the whatever value that you're trying to actually manage. That's what it is. So this is where the birth of smart contracts give to a new type of ecosystem, not the normal blockchain. Now you see there's a utility around it. I can program it. That's why people see programmable money and all that kind of things. So I can program around that ecosystem that gives you a different type of class of assets. So today, if you want to understand the concept, today your dollar, right? So your dollar is just a medium, right? It does not have any action that can be done upon it. But with this particular ecosystem, it's slightly better. I can put conditions before that value can do anything. What are the conditions? You decide what the condition is, right? You're the programmer, you're the developer and all that. This is where suddenly things become much more interesting, because why? You started saying that, why don't I actually program things so that I don't need the human to do it? This is where it's slightly different. But anyway, it's not as different as you think, because why? Because if you look at today, right, there is actually something on it, the way how it's being governed. So smart contract is the definition that you have today. But today, things are being fine if you look at this particular ecosystem and all that. Traditionally, it's run by legal contracts. But who's enforcing it? Humans. You and me enforcing it and all that. So is it new? Yes, it's new. A lot of it is new because now you have codes running on top of it. Because why? With that code, you do not need the human anymore. Because why? Human has vested interest. So while with code, it can be run, and in this case, you want a 24/7 trading and all that, it does not matter. You can have it still because it's automatically. Is it, how should I say? Is it really foolproof? Well, that's where the new job roles come into the picture. Somebody has to audit this kind of stuff. Nobody says it's going to be bulletproof. Somebody has to audit and say the code works actually, and it's actually defined according to the set of rules that is being designed to. So only then when you have that consistency you can say it's bulletproof. But in the world of programming, and I'm not sure how many of you does a lot of programming, especially a lot of there's a lot of bugs on the software that we actually did previously and all that, but we still ship it out. We follow Microsoft way. It's just a blue screen, so what? But anyway, but it's not going to be the same thing, chances are, for this kind of ecosystem. For this kind of ecosystem, you need some form of trusted code so that because this is handling with assets. So with asset, there's a value to it. you have to be very serious about it. But anyway, what I'm trying to say with this particular sites, we can go through one by one. So a lot of it is not naturally new. Some of it can be new, but a lot of it is not naturally new. Reason being, a lot of it is just a mirror to the traditional ecosystem. So, and then this is where, at the current moment, where the DeFi is going, at least where my understanding is. The reason being is because it's easier to make a digital twin of the concept and then trying to sell it as a product rather than creating something totally new, right? So that is the easiest way. So, but in a sense, it's still exciting. It's exciting. Because why? The reason being is this is now different, so a lot of it has to do with technology more than anything else. So you have to understand the technology itself, how you want to develop around it, how you want to craft certain things, and build that concept rather than the normal way, but with a new way. So that's currently, I feel, for us as a base so that we can understand when we say what digital asset, decentralized finance and all that, what is it all about? And then at least for you guys, then you have more feel towards the next discussion. So now, you have the base, let us challenge a little bit from whatever we have understand. And this is, you're gonna be thought leaders and all that. I'm gonna be 6 meters down in the future. Well, hopefully not too soon, but anyway. But so the idea is for you to keep challenging the norms, so that hopefully we have a fruitful discussion. And more than that, for you to implement those ideas and actually innovation moving forward. And I believe in that. And I believe it started with all of you here as a community rather than us old folks, because why? It's hard to change us. It's much more easier to change you all here. Sorry. Oops. I lost the, what happened? Okay. So today's world, right? This is the base of today's world. Almost 90%, almost 90%. Not all of the money issuance and all that goes through this kind of ecosystem, but almost 90% of money issuance goes through this type of ecosystem. That's my understanding. But anyway, let's talk about it. So most of the ecosystem today, if you talk about money, is through the lending of money. This is basically through that, right? So I'm not sure how many of you here as a student, when you decided to join UNIMI, so do you, I mean, obviously one part of it, your parents going to help you pay, right? But the other part of it, there will be student scholarships, or sorry, student loans, if I'm not mistaken, right? So you start with that, and the basis of everything, your credit cards and all that, you start with somebody giving you out money through the debt ecosystem. This is where money is today, right? So it gets done, the loan is then deposited into your account, and you do whatever economic activity that you're currently doing today, right? So with this ecosystem, what is the most important? The most important is your ability, in this case, or my ability, to pay back the money that is being given to me, right? So that's the current ecosystem today. Obviously, there is limitation and all that, but anyway, that's the current ecosystem that we're living today, right? So rather than this, right, is it possible for us to change from the debt ecosystem using the new technology to a contribution-based ecosystem? So what does that mean? What does it mean? So we're talking about the basis first. The original presentation is about the economic output, right? So everything that we do must somehow generate an economic output. And that's the idea anyway. So if there is an economy, right, and therefore there's activity around that economy. So rather than saying that, okay, I want to do an economic activity, right, but I need some form of capital, then I have to go to somewhere, please lend me that capital through the ecosystem that we currently are in today so that I can do my economic activity? Is it possible to change that mindset a little bit and say, I'm currently have this economic activity. I can guarantee that this economic activity, I can sell it to a person somewhere in the world, right? And with that guarantee, allow me to give access to the capital. So it's slightly different. So is it possible to do that? So the idea is, can this be done? Well, this is the scenario. So for example, say for example, you are a logistic company, you can commit to 1 million shipments. So with that, then you say, okay, you go to some sort of markets, right? To say, okay, this is roughly my probability. So somebody has to forecast this a little bit, right? And then this is my production, my productivity. And you use that, right, as a capital that is raised through my productivity. So what's the difference between this? The returns is based on the productivity. So previously with the debt, they don't care about the returns. Am I correct? As long as you owe me this money, you have to pay me with whatever the extra is, which is the interest from the principal and the interest, right? So in this case, is it possible, if we're talking about productivity, obviously there's a lot of things that involve what is meaning of productivity and how it can be verified. We'll come that to the next section. So the idea is to turn that into where the risk is shared now, because we're talking about productivity, and the market is not within your control. So if the productivity output is slightly lesser, then the sharing of that will be less also as well. So rather than you put, because remember, we are not talking about money per se here. We are talking about the decentralized economy. Decentralized economy is about you and me. We, the community, make it happen. That's how it started. So the idea is can we change that behavior to where the participant is a little bit more aware rather than it's about making money for me. So this is where, like I say, it's challenging the norm. So since you are here, I'm challenging you guys, maybe in the future, can it be done? I do not know. I don't have the answer for this, right? It's more of just for us having a discussion and challenging each other. So then, rather than you shift from, so the idea of money, right? Rather than you have a traditional institution from a normal bean counter type of thing, you want to say, can we change this to become a protocol-driven, right? So the idea is then the institution themselves have to change, right? So rather than you say, okay, I'm checking in terms of becoming loan issuer, whether you have the capability or I want to accept you, so this condition are being met. So then what you're looking into now is a contribution evaluator, whether your productivity output, right, as part of the economy is something that I have an interest to actually put my capital in, right? So these are the things that can be interesting for us in the future if we keep challenging whether we can use the new technology to be used in the different form of how we're doing it today. This is where I feel that it becomes much more interesting, right? So then you have new type of emergent roles into the ecosystem, right? You have validation networks, you have market pricing platforms and all that. Because why? Because you need to price out those productivity output. And you need protocol governance, right? But all of this goes back to one thing. All of this goes back to trusted, validated data. If we're going to move to this route, and even today, if you ask me, a lot of it requires trusted and validated data. And that's where the challenge of the ecosystem that we have today. So we want to do a lot of things automated and all that, but is the sources of the data that we get is the trusted data. And you will see this if you decided to go on your journey into this type of ecosystem, whether the source that you want to bring onto the chain, whether that data is a valid data. Because why? You have to remember, because those data that you consider valid will be there forever. So, and those are the things that is very important. So in this case, the economic data needs to be authenticated and verified and acceptable by all parties, because why? That becomes your trigger if you decided to have a contribution-based type of economy, because that gives you the signals. So now it's different signals now. It's a contribution, so I'm part of the productivity, that gives you a different type of signal. So this is where we go to the next section, data. So my boss previously says data is the new economy and all that. So, well, let me enhance that. Trusted and verified, validated data is the new real economy. So without that, if you start bringing any type of data into the ecosystem, especially in this type of ecosystem, right, then it will corrupt your ecosystem and nobody will trust it. So as we actually move into this type of ecosystem where this is becoming an asset that later you will own one day, right? So it becomes important that when you trying to assess any type of asset, you have to have a validated data. So when we talk about data, right? So the idea is we not just want to have a digital economy with trusted data. So here we're talking about a metered data, a measurable data that is trusted. So in this case, the domain, right, must basically falls within those 5 categories. Right? It has to have those 5 attributes. So in terms of the identity of the validation, the credential of it, the registries, whether you have the license, and all that, compliance check, and all that, and status lookup, right? So what do I mean, especially by metered trusted data, right? So metered trusted data, the definition here is very simple, right? You do not, in the centralized ecosystem where we are today, right? The metered data, the trusted data comes from an authority, right? So metered data comes from the ecosystem. So what's the difference? I give you the simple. If you walk outside today, right? Is it raining or not raining? It's not raining, right? It's an event. If the government of today decided to say that at this particular time, if you walk out to that room, it will rain. So it comes from an authority, right? So in the authority, say for example, it's the government of Malaysia. So in this case, I'm representing the government of Malaysia. So I'm saying today that outside there, you look out, it's raining. So that's the current definition of trust validation. It comes from some sort of authority, either the bank as an authority or a government is the form of authority to say that this particular set of data is actually trusted and validated data. But the reason why we have a decentralized ecosystem, because why? Because we don't trust the government. I mean, I'm not saying don't trust me, but anyway, but what I'm trying to say is there's a lot of mistrust from the society to the government. I give the easiest example. How many of you remember during the GST period? Remember, right? Or is it too young to remember? Okay, doesn't matter. So, what's the major issue with GST? You all know. GST issue is because, at least if you read it from the news, right? The payment back to the individual who contributed to the GST is very slow, right? Months and all that. So what's the reason what the government gave an excuse, I would say, back to those contributors of GST? It's because you did not submit correctly. Am I correct? So from me as an enterprise who submit to this ecosystem, I feel like I have this submitted and all that. I follow your guidelines, but I still don't get the money. right? The government say you don't actually follow and all that. So who do you want to trust from that point of view? So this is where it becomes a challenge from that ecosystem where you have a centralized authority. So, but like it or not, I want to get my money back. So what I have to do, I have to just keep doing it until they are happy. Is it the real reason? Nobody knows the reason. There's a lot of reason, you know, like the shenanigans behind GST and all that. So I want, if for you, the young people who does not know what it's all about, go and check the archives and all that, go Google. But there's a lot of story behind it. But what I'm trying to say is during that period, there's a lot of mistrust from the enterprise themselves and the government, right? So this is what we're trying to say. So if you do not have a way to, in this case, the centralized authority, we have to form a new way of trust, especially in the new economy. So that's the idea of metered trust. So this is where this is where MBI chips in. So one of the things that we wanted to do with the government of Malaysia is to create all the proper information so that it can be publicly be attested. So what do I mean by this? The idea is simple. So is it does your data needs to be actually be publicly open? No, the idea is no. So you need to actually, what we're trying to do is those record keeping, or at least a way of a method to verify it, is publicly known to everybody. So if you are in this ecosystem, so basically it has to do with something called signing and hashing, right? So that's basically two things. How you do revolve around those two concepts. So encryption, signing, those kind of things. So the idea is you keep those way of proving those particular data, credential, transaction, and other forms of data, to actually have a record in saying that those information can be checked, and everybody can check this, right? So say, for example, the GST scenario just now, you submit your invoices and all that through the GST ecosystem, and you tell the government, hey, this is already signed by you, you agree, I've submitted and all that, this is a valid, here's the record on a chain. And the government says, okay, I can check this. It's there also as well. So there's no way, you do not need to reconcile, right? So same as the government. The government says, hey, there's this particular transaction that I see coming into this system, it belongs to you. Here's the proof of it on the chain. You go and check this yourself. So you yourself as the owner, you can check this. So it's a single point of reference for all. It does not matter what it is. So as long as it's in form of this category, this is what we wanted to do with the government of Malaysia. And with that, you can really create an ecosystem of trusted data. So this is our focus. The idea is from digital IDs, driving license, what do you call that? Surat Beranak. My time is called Surat Beranak. What do you call that now? Birth certificate, sorry, birth certificate. So basically, all legit government documents and all that, all trusted transaction, if you involve in trading, all your bill of lading, invoicing, and all that, all those documentations and all that. And the idea is these are the data sets that will be crucial to the economy. And if it's crucial to the economy, then we are interested to have that piece of cryptographic record stored on our ecosystem. So this is where we're currently talking to a lot of parties involving this. Obviously, working with a lot of government offices is not that easy. I'm not sure whether how, I mean, as a student, I think you have gone through the experience applying loans, and then going to PTPTN or whatever it is and all that, and it's not that easy. Just to share with you, this is, because there's a lot of mention about real world asset just now, and tokening of assets and all that. So we had a discussion, so this is Ranjit for you. We had a discussion with the land office. So we say, okay, is it possible for us to tokenize? I mean, at least first, create a credential, right? Create a digital credential of your landowner, as a landowner. You know what the land office said? There's an act. There's an act today which has not been changed since donkey years and all. It's an archaic act. The land title need to be in physical form. That is the only recognized land title. I'm like, I crazy. Today we live in the digital world and all that. You have a database of all the geolocation of the knee and all that, but the land title must be in the physical form. Must be in physical form. So that is why people are playing around with the concept of RWA. For that purpose, for you don't know, just bear with me. So what they have to do, they have to have a company owns it. So a company owns the land. So rather than real tokenization of the particular asset, so you have to form a company around it, and the company is then being used to distribute the tokens and all. Basically, the company ownership. So that is where it's currently is today. So it's a lot of challenge to convince the government. Anyway, a lot of acts need to be changed and all that. So it's interesting. So we live in an interesting time. Hopefully one day that all this can be achieved, at least during my living years. But based on the formation of MBM you see just now, we'll see. It took us 5 years just for that. Anyway, I mean, I can laugh because why? I'm part of the government. You all cannot laugh. But anyway, so one of the things that we want also to keep track, this is we're trying to work with the Ministry of Digital, right? If you see today, this is the government ecosystem services. So it involves some sort of this process, you see. So you go to any government office and all that, you start with registration, some document that you need to fill and all that, and then being verified. Then there's payment for that particular services. Then you get the fulfillment, whatever service that you want around the government, right? So all those require some sort of services that you actually need. So this is where we tell the government, that's where the transaction comes into the picture also as well. We wish for this to actually be anchored on a chain also as well. So things like e-invoice, those kind of thing and all that. So there will be a lot of discussion. So the idea for this, if this thing later on can be put on a chain, this is where we feel that you will have a difference in how you handle the current economy of today. Because why? Because as the government moves towards this kind of ecosystem, you have a basis for a trusted data that you can use for different purposes. So this is what we want to achieve. Anyway, back to that. So the idea is having a tokenized, idea of having a metered trusted validation is so that you can actually create something called a unit trust of validation. Why you want to do it? Because remember, we want to create signals. And these are signals. So the idea, each unit trust of validation, in this case, shipment completed, products being delivered, service actually being rendered and all that, those are signals toward the economy, right? So you have that, then suddenly you have a new way of measuring the economy and all that, and possibly a way of how we deal with the current money ecosystem, or at least current the financial ecosystem. So this is where we're trying to, hopefully in the future, it's going to be a challenge for us, but I would like to remain positive in all of whatever I'm doing. So all this has to be done in phases, like I mentioned. So we are basically so just to share, we are trying to explore certain activities around it. First of all, how to create those contribution in the several sectors, and there's a few things that are happening right now. I mean, Unimai, if wishes to contribute, I'm welcome. So we are talking to another party in Singapore, another government entity in Singapore as well. So we like to look at trade documentation from the trade document from bill of lading, the invoicing and all that, to work with us. So have defined the current ecosystem over there, the banks that involved, the logistic players, the ports and all that. So similarly here in Malaysia, we're trying to do the same. We will actually get Sarawak. Sarawak seems to be the most frontier about this, so they're willing to explore. So the idea is to have a pilot and then build that ecosystem. So we have our ecosystem together with our partners, and from there we started small. So that's the idea currently why we're heading with some of the things that we do. So just to recap back and all that, so we have So I've started with the journey of the traditional ecosystem and all that, compare it to the current DeFi ecosystem. And then challenging you guys, is there a new way for us to create monies and all that? And then from there, I landed down to what we're doing and why trusted data is the most important thing in all this, in any digital ecosystem. So the idea is, this is how I feel. If there is no proper validation, no trusted ecosystem, no trusted data, chances are no real digital economy can take place. With that, I thank you.
Thank you, Mr. Azhar. 26 years building technology at the heart of Malaysia's public sector and now leading the blockchain infrastructure layer that will underpin our digital future. Thank you again. Okay, ladies and gentlemen, let us hear from someone who sits at a truly unique intersection. Our third speaker of the session brings a perspective that very few can offer, the intersection of Islamic finance, Sharia governance, blockchain technology. He is the founder and CEO of Adil Advisory, a firm focused on ethical and Sharia-compliant financial solutions. As Malaysia charts its course as a global Islamic finance hub, questions around how blockchain smart contracts and tokenization align with Sharia principles are becoming increasingly important. Dr. Mufti Yusuf Sultan is one of the foremost voices on this topic. Ladies and gentlemen, please welcome Dr. Mufti Sultan to the stage.
Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good afternoon, everyone. It's a pleasure to be here today in this auditorium for a very exciting session organized by Unimi and supported by other esteemed partners. And I was mesmerized listening to the speakers before me, and Allah, they have covered wonderfully on the topic. What I would do, I would just briefly touch the point of Sharia governance and Islamic finance that we look upon when we validate a blockchain-based initiative. Before I go into this topic, so I was briefly introduced, and you can see my profile here. What we do, we have a Sharia advisory company known as Adil Advisory, and Adil Advisory is a global Sharia advisory company based in Malaysia, licensed as a Sharia advisor with Securities Commission Malaysia as well as Labuan Financial Services Authority, and a training partner and exam center for the topmost global Islamic finance standard setting body AAOIFI, IOFI, based in Bahrain. And we are also registered with MDEC as an MD company, Malaysian retail company. And so far, we have been advising clients and partners in more than 23 countries across the globe. And few of them, in fact, several of them are actually trying to implement Islamic financial services and solutions through utilization of blockchain, including tokenization, staking, crypto solutions, sukuk, etc. So I would try to touch a few things, inshallah, not so much on the technical aspect. We have got into the technical aspects very well from the previous speakers, and I really appreciate that. Oh, before I proceed, one last interesting thing. Just last month, I was in Jeddah, in Saudi Arabia, before all these conflicts, of course. And we were awarded the Cambridge Islamic Funds Awards for being the best Sharia advisory entity and Islamic wealth management in Malaysia for last year. All right, so we hope to continue that responsibility in taking the leadership based in Malaysia and taking it to the global frontier. Now, I have few very basic slides, and I would like to completely skip those. We understand why blockchain is important and how it impacts the financial services and other stuffs. But how does it all relate with Islamic finance? You see what exactly Islamic finance is all about. Islamic finance is all about ensuring justice and equity among the parties, among the stakeholders, among the economy, among the humanity, among the environment, basically every stakeholder of this world. You see, our name, entity name Adl, is an Arabic word which denotes exactly same meaning: justice, equity, fairness. And in Quran, Allah subhanahu wa ta'ala has re-emphasized this various times, several times, so that we are just in all our dealings, even when we are dealing with our enemies, so that we don't do any corruption, we don't do any fraud, we don't cheat, we have transparency, we have no information asymmetry. So all these things are part and parcel of Islamic finance in general. Furthermore, when we look at maqasid al-sharia means the objectives of sharia. The objectives of sharia are basically the objectives that are conveyed through all different verses in Quran as well as the traditions of the Prophet Muhammad sallallahu alaihi wasallam. And if we want to summarize what are the core objectives, we will find there are four core objectives. And if we extend these, we will see these are actually for the benefit of human being, for the environment, for the society, as I mentioned. In Malaysia, the Securities Commission of Malaysia has come up with Maqasid al-Sharia guidelines. I think it was a couple of years back. And just this year, the Labuan Financial Services Authority has also come up with a similar guideline. And before these two, Malaysian Central Bank, Bank Negara Malaysia, came up with a VBI framework, value-based intermediation framework. Now, all these three different documents and frameworks from three different regulators have one thing in common. The common denominator here is that all these three documents are actually based on the philosophies of Maqasid al-Sharia, the core objectives of Sharia, which are much more comprehensive than the SDGs, than the Sustainable Development Goals by United Nations, than the ethical finance, responsible finance, sustainable investment, all these principles. I had this great opportunity to be part of the VBI research team when I was doing PhD at INCF University in Malaysia. So the story I'm trying to make is that if you look at what blockchain does and what Islamic finance is all about, you will see that there is a critical intersection between the two. We are talking about trust, and that trust happens through the clarity in the contract, responsibilities, ensuring the rights of the parties. And at Islamic finance, we are talking about the same thing. When we talk about blockchain, we are saying it's immutable, it's built through a validation. The previous speaker, honorable speaker, he mentioned about the that can be considered as a for the validation mechanism. So all these things links to the core objective of Islamic finance, building that block of transparency. And through all this, we have this broader objective of protection of wealth, which is one of the core, five core objectives of Sharia, to protect the wealth. How do we protect? By safeguarding the interest, safeguarding the capital, and preventing unjust loss or exploitation. Now, as I already mentioned, so when we talk about transparency, that's exactly shafafiyya that we talk in Islamic. When we talk about the distributed consensus mechanism, that's exactly when we talk about ensuring that the data is valid, the data is proven, there is no gharar, there is no uncertainty. See, one of the few prohibitions in Islamic finance is gharar. Gharar means excessive uncertainty in contracts. And how does that happen? When we have information asymmetry, when we don't disclose the material information based on which a party would decide either he wants to enter into the contract or not. And that gharar, that uncertainty can lead to fraud if the information was even misleading, which deliberately to cheat the other party. So that's even worse. So all these things tie to the things of Islamic finance. Now let's look at what we exactly do when we check blockchain-based solutions. So it may appear apparently that everything is fine, then why we need Sharia compliance? Basically, whenever we say something as Islamic, as Sharia compliant, there is an additional layer of governance added to it as per the international Sharia governance standards by starting from Bank Negara Malaysia's SGPD 2019, Sharia Governance Policy Document 2019. For example, if you look also from under SC, you can look at guidelines on Islamic capital market products and services, the responsibilities of Sharia advisor. Then in the international level, you can look at Islamic Financial Services Board, IFSB's governance standards, IUF's governance standards. All these talk about the same thing, that whenever you say it is Islamic, you must have another layer of a governance on top of the basic corporate governance. So there will be a Sharia advisor or a Sharia board. There will be internal Sharia compliance. Just like we have compliance, regulatory compliance, there will be Sharia compliance. Just like we have risk management, we will have Sharia risk management. Just like we have internal audit, we will have internal Sharia audit, and so on and so forth. Now, when it comes to these fintech solutions, including blockchain, what we do as Adil Advisory, we supplement these functions as a package, because we understand that not same size fits everyone. For example, for banks, like Islamic banks in Malaysia, Islamic insurance or takaful companies in Malaysia, both regulated under the central BNM, Bank Negara Malaysia. They need to have separate Sharia board, they need to have separate internal Sharia compliance, internal Sharia audit. So it's a big, we are talking about a big team. It's a lot of expense. But when it comes to fintech, we look at the proportionality. We understand that they need something that is affordable, but at the same time, we don't compromise the basic requirements. So now, when we are engaged, we look into, of course, first and foremost, the core, because end of the day, we see blockchain as an advancement of technology, as an enabler. End of the day, it's an enabler. Of course, it does everything very nicely, but then we'll have to look at the substance. For example, if we are talking about tokenization, what exactly the asset is all about, right? If it is a rental asset, then and the income will be derived from some rent as well. We are only talking about, changing ownership, but there can be structure similar to REIT. So then we have to see where the rental is derived from, So these are the things where we look at, and we ensure that there is no prohibited elements. For example, no riba, no maisir. Maisir is gambling. And no excessive gharar, I mentioned excessive uncertainty. And of course, the permissibility of underlying asset that is being tokenized. If it's a land or real estate, it's pretty much straightforward, but mostly it may not be the case. There could be so many types of assets being tokenized. In fact, Securities Commission Malaysia has issued a landmark Sharia resolution, I think at least 3 to 4 years back, on digital assets. And it went through very details on the different types of digital assets and which will be considered as Sharia compliant, which will not be considered as Sharia compliant. So we take these, we take other international resolutions, standards, and also the contracts. So when we talk about smart contracts, for example, still there is a contract. It is smart, but there is a contract. What are the terms of that contract? Are these terms in line with Sharia requirements or not? We have to go into these. So we have to go into the codes that are being coded within smart contracts, the logics. When we work with these blockchain systems, we ask them to give us a very detailed diagram, and not only for the money flow, but also the different logics when things executes. For example, in Islamic finance, we are very particular about contracts. Are the contracts, signed by, or at least vetted by or approved by the parties? Are they sane? Are they eligible to sign the contracts? What are the conditions of the contracts? So many things we have to look at. Likewise, when we are talking about today on smart contracts, we have similar requirements, but of course, we understand the environment is different. Now we're talking about on-chain or blockchain contracts, so there are some differences, but we must ensure some basics. Likewise, when it comes to anything tech, the trend that I have seen, or we have seen, when the fintech booming started over the last decade or a couple of decades, including that also impacted the Islamic finance. So we see a lot of Islamic fintech as well. Now the trend that we have seen globally, not only in Malaysia, that there has been a notion of giving additional flexibility to the fintechs. Why? So that they can boom, they can expand, they can have more reach, So this is deliberate and this is appreciable, because governments do not want to impose the same requirement that they're imposing on the banks, for example. And that's the whole point. Why we are excited with this, because we are coming out of like a fresh air. Imagine you are in a cage and now you're coming out. Now if you impose the same regulation, it doesn't work. So because of this, there has been a lot of flexibility given to the Islamic fintechs. But what happened on the other side of the coin is that compromised some of the basic, not only Sharia governance, but corporate governance as well. And you will see globally so many frauds across the globe. Look into North America, look into China, look in our part of the world. A lot of scams, frauds that happen because there has been a lot of flexibility even on the requirements of governance. So from Sharia point of view, we are very, very particular about Sharia governance. As I mentioned, we may not have separate boards, separate things, but the functions must be there. There must be an advisor or board who is responsible to validate all the terms and conditions, all the product details, all the algorithms which facilitate the smart contracts, and so on and so forth, including the asset. If we are saying there is an asset being tokenized, for example, the problem that was shared by the previous speaker, that in Malaysia, if you want to tokenize a land, there is a problem because you cannot have a digital contract. That's what you said. I think similar issue we have in other countries as well, because especially in this part of the world, we rely a lot on the land code that was done by the British. I think I come from Bangladesh, we have the same issue, same land code inherited from the British, Pakistan, Malaysia. I think we have a common problem. Now, what is it from Sharia point of view? There is a possibility that the rights are not linked. For example, if there is no company, the land is there, token is there, but no company. So we can easily understand, those who are in the field, they know that there is a disconnection between the real asset and the on-chain token. And from Sharia point of view, it's very problematic, because Sharia is very, very particular about rights, very particular about rights. If you read the Quran, every now and then Quran is reminding us about giving the rights, due rights to the people, due rights to the people, due rights to the people. We cannot imagine any situation where there is a gray area about the rights. So I cannot imagine, we cannot imagine that there is a token, but the token is not 100% linked with the real asset. So these are real problems, and we need to navigate. Just because there is a token, we are not excited. We need to see, I mean, from governance point of view, of course, the technology point of view, we are excited. But from the Sharia governance point of view, we need to have that real linkage that assigns all rights and responsibilities to the parties. If things go into dispute, if things do go to the court, does he have the right over that proportionate ownership of the tokenized asset? This is the question that we need to look at. All right, I think I mentioned a few of the things. Some of the compliance challenges we see, like smart contract, ambiguity sometimes, maybe the valuation uncertainty. This is something that not only because of blockchain, but before blockchain as well, we have some uncertainty in valuation always. So how do we ensure that? For example, even in Malaysia, when the ECF started, equity crowdfunding started, P2P, ECF in the early days, we saw a lot of cases that valuations were inflated by not only 50%, 20%, 100, 200, 300% as well. If you recall, these days, the government was also co-funding into ECF crowdfunding. So if you have, let's say, collected fund from the public, 100,000, government would also fund another 100,000. But that led to an inflation of valuation. And there was this point, how do we trust? These crowdfunding platforms is saying is this, my company is worth $5 million. How do we trust? There's no independent valuation, no standard mechanism of valuation. It's just self-proclaimed valuation. And we know all these things went to wane when the war starts, when the economic recession starts. Nobody values these companies other than real revenues and income in the books. So we have to look into these as well. And sometimes in many blockchain-based things, we see a lot of automated interest mechanisms that interests are coming into the system. We have to look into these as well. I will wrap up quickly as I was just given 15 minutes. There are some use cases I wanted to highlight, but I will just go very quickly that we have worked. So for example, this is one blockchain-based tokenization in Canada, which we have been advising from their commencement, and they have been tokenizing Sharia-compliant real estate properties in Canada, in Toronto particularly. And we looked into the different aspect. So they have on one hand fundraising, then on the other hand tokenization, and then trading part as well. This is another use case of using blockchain in Waqf. Waqf is an endowment, a perpetual endowment endorsed in Islamic finance, Islamic social finance, one of the very interesting tool of Islamic finance. In fact, if you are in Malaysia, you must know Waqf because so many initiatives are going on Waqf, mashallah. So Fintera has been trying to do Waqf through blockchain. Then if we look at some other opportunities also, we have seen across the globe, there are zakat being used on blockchain as well. Because end of the day, we want to have traceability. We want to have transparency. We want to know where is the zakat going. Zakat, by the way, is a obligatory charity which is obliged on every Muslim or eligible for annual charity as just a 2.5% of certain wealth. So there are initiatives to take zakat into blockchain as well. Other than that, we think overall blockchain and smart contracts are, again, as I mentioned in the very beginning, I just echo the same before I conclude, that it really brings a lot of value to Islamic finance, because when we have this whole chain logged with events, with valid validation and everything, trusted validation, it really decreases the number of hours for us. Because now we can audit very easily. We know we don't have to doubt on the integrity of the transactions, on the different legs of the transactions. This is another project that we have worked on, staking. If you have certain cryptos, you can use it to earn some profits through staking. And we did help one staking entity to structure staking, Sharia compliant staking based on Ethereum. This is how it looks like. Let me see. This is based on Solana. We also did based on Ethereum. What it does is that it has it has a proposer builder mechanism since the merge in Ethereum. And what it does is that before it goes for final validation, we have different types of builder logic, custom builder logic, which screens the different types of transactions against Sharia principles. For example, if it's an interest-bearing debt transaction, it will be filtered out. And if it's a token of a gambling or something like that, it will be a transaction of gambling or something, it will filter out. So there is this, there is this way of filtering in Ethereum now, and we have structured based on that. Likewise, so these are some of the transaction categories that we have excluded. For example, derivatives, leverage, because in derivatives, futures, forwards, options, we also have Sharia issue, fraudulent in schemes, for example, things related to Ponzi, pyramid structures, also alcohol, pork, and gambling, etc. And this was on Solana, same thing. So after the fetch stage in the back end, we have put a Sharia compliant filter, and then only it will pass it to the next phase. So this is how it looks like. The builder receives a transaction, then applies filters, create the compliant block, and then only the validator would validate and broadcast it to the Solana blockchain. So this is another thing that we have worked. Other than that, in the global space, we have seen a lot of other blockchain-based initiatives also taking into the game. And we are very excited on this part of blockchain usage, which actually solves the real problems. not the hype thing, not the crypto thing that people think that I would just become billionaire by buying a pizza today and tomorrow I become a big, that is story. We are not excited about that. We are excited about the real use case of blockchain. All that we have seen from the previous speakers, that mashallah in the government things and other things, we are excited about that. And we believe when we put the Sharia compliance into this, it makes it even better, even more trustworthy. And of course, it is also in line with the ethical practices and sustainable practices in line with Maqasid Sharia. With that, I thank you again, the organizers and all the previous speakers and also the students. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Mufti. A very warm welcome again to Dr. Mufti for the very insightful information and sharing. Ladies and gentlemen, our fourth and final speaker brings a rare combination of institutional finance depth and frontier digital asset expertise. He spent a decade of training macro at Goldman Sachs before moving to JP Morgan, where he managed USD 10 billion dollars in currency and interest rate risks across Asia. In 2018, he was headhunted by SBI Holdings Japan to serve as COO of SBI VT Trade, a regulated crypto exchange in Japan, where he also built first internal crypto trading desk. Ladies and gentlemen, let's welcome Mr. Tiong Hingate.
Good afternoon, ladies and gentlemen, and thank you very much for having me here. I don't know about you guys, but according to research, after 45 to 50 minutes, a person's focus tends to stray away. So I really focused the last 120 minutes to the previous 3 esteemed speakers. I was virtually focusing because there was so much information, so much things that I've learned, specifically about from Dr. Mufti on Islamic finance. So just take it easy. My session will be very easy. Basically, after this, you just relax and you don't have to think too much. I will just talk about very simple things about what we do and the things that we are building in Malaysia. Just before I start, how many of you guys are students? Can I see a raise of hands, please? Thank you very much. How many of you guys are from working professionals? Thank you very much again. So I see that we have about 65–70% students and 30% of working professionals. So I will address things as we move along. I will just make things up. Okay, so first and foremost, my name is Tiong. As I was introduced, I'm the CEO and founder of Satori Research, which is a digital asset platform based in Hong Kong. For the next 15 to 20 minutes, I will be talking about establishing Malaysia as a leading digital finance hub. However, a lot of good points have been taken by Mr. Ranjit. So, I will gloss through certain points and you just sit along and let's go for a ride. First and foremost, who are we? What is Satori Research? As I mentioned, Satori Research, we are a digital asset platform. We have 3 mandates. What do? We invest, we incubate, and we educate. Where do we operate from? Our headquarters is in Hong Kong, but we have operations in Japan, in Tokyo, and we have in Malaysia. We actually, the last 2 to 3 years, we have been refocusing on Malaysia since there are so many interesting going on in this part of the region. I'm actually a Malaysian. I still hold a Malaysian passport. But I left Malaysia in 1996 when, back then there was a Dasar Pandang ke Timur where I was sent by the government to Japan. So I spent about 16 years in Tokyo and the last 15 years, 14, 15 years in Hong Kong. But in between, I actually stayed in New York and London where I was previously I was working in 2 investment banks, which was Goldman Sachs and JP Morgan. What do we do? Specifically, we invest in blockchain startups. Blockchain startups, we basically support hungry, young, capable students or startup founders. And what do? We advise them on, we provide them with money, right? If they are very young, they are very hungry, and we believe in their ideas in the fintech world, in the blockchain world, we will provide them with funding. And then what we do is not only we give them money, but we help them in governance. Because a lot of young founders, they don't really know about how do you start a company? What's the right governance? How do you manage cash flow? How do you manage your burn rate, right? How many people do you hire? Who do you talk to when you need to do certain things? How do you get connected to important people like Mr. Azhar, who knows certain things, who has connections to the government? And if you're doing Sharia, you're doing Islamic finance, who are the right people you talk to? So this is where we provide advice, we provide funding, and we provide a lot of help to fintech founders. What else do? We actually provide advisory services to governments and investors. Investors here, we talk to institutional investors, we talk to family offices, we talk to mostly ultra high net worth individuals. That's why we are not a household name. We are not like a Kenanga, we are not a Maybank, we are not a Citibank, we are not a HSBC, because we only interact specifically with institutional investors. Who else do we advise? We advise governments. We advise not only governments in Malaysia, but specifically regionally. And as I was serving as the COO, and I actually created the trading desk, digital trading desk in Japan for one of the largest conglomerates, SBI. So basically, we were taken, our advice carries a lot of weight. A couple of highlights on Satori Research. So as I mentioned, we are a spin-off from SBI Holdings, which is a conglomerate in Japan. We basically spin off in 2020 during the COVID period. I joined SBI as the CEO of the crypto digital asset trading exchange. In Malaysia, we have 6 regulated exchanges, namely KDX, Auditorium, then we have Luno, MX Global, we have Hata, and Synergy. In Japan, we have 20 over exchanges, regulated exchanges, but SBI VC Trade is one of the most profitable one. The founding members from Satori Research comes from Goldman Sachs and JP Morgan, where actually most of the founding members worked for me in my previous 2 institutions. So they were my traders, they were my quants guys when I was running the book, running the portfolio for JP Morgan and Goldman Sachs. Satori Research, we form extensive partnerships with both traditional and Web3 institutions. When we talk about traditional institutions, we are talking about banks, we are talking about law firms, we are talking about accountancy firms, we talk about asset managers, family offices, because one, especially during the very early days in crypto or digital assets, there was a lot of misconception, which it's true, right? Like, Dr. Mufti was saying, there's a lot of gambling, speculation. There was a lot of that within the crypto space, but we have progressed from that. We are now at a mature stage where institutions, central banks, governments, they're coming in and they're looking at blockchain, and if this is the future, they need to build up on top of that. The Web3 institutions that we talk to or we partner with is mostly exchanges. So in Malaysia, as I've mentioned, all the 6 regulated exchanges, we have good relationship, and some we do have partnerships, and we work on certain initiatives together. When it comes to Web3 institutions, there are those that are called digital asset custody. So what they do is that they keep the tokens on behalf of the clients. So in Malaysia, we have 3 to 4 custodians, namely Gambit, JDX, and CoKeeps. Satori research ideas and views are actually well sought after by the news media and investors. So it's a bit embarrassing, but my analyst slapped a lot of photos over there. So basically, over the last 6 to 8 years, we have been interviewed a lot by the Bloombergs of the world. We participate in conferences globally, in Hong Kong, in London. And on the lower left side is basically myself. I co-led a delegation to the Parliament of Malaysia a year ago to meet the Prime Minister and Bank Negara, including SC. Okay, there will be certain overlaps with what Mr. Ranjit from Kenanga said just now, because we worked together specifically from the mid of last year. So what do we do, right? Like you talk to governments, you put some money in startups. How do you make money, right? Like, what do you actually do? So on a typical engagement, on a typical cycle, Satori Research, we will have 5 to 7 projects that we work on. The projects could be in the form of tokenization, it could be in the form of partnerships with an exchange, or it could be working with a custodian, it could be a trust business that we're doing. But I will use this Project Juara since this is the biggest thing that's happening in Malaysia in the crypto space this quarter. I'll skip on certain things, but there are 4 things that I would highlight in 2025. The first event was in March 2025, which was a year ago, where I co-led a global delegation to the Parliament of Malaysia to meet the Prime Minister, together with Tengku Zafrul, who was back then the Minister of MITI, Ministry of Investments, Trade and Industry. So we were at the Parliament, and we talked to Tengku Zafrul, who was very engaging, and naturally PMX, Prime Minister Anwar Ibrahim, was very, very excited. Yes, he has heard about blockchain before, and there was a lot of misconception. But during the 2 hours in Parliament when we discussed, we basically brought down points, actual working points, why we think blockchain is important, why Malaysia can be a leading digital finance hub in the region, in Asia, and he was actually very, very excited. So it was witnessed by the Assistant Governor of Bank Negara. Also present was SC, and there was a lot of other smaller ministers around. 1 month later, in April 2025, the Prime Minister, Anwar Ibrahim, reaffirmed Malaysia's ambition to become a regional blockchain hub. He stated that with the right steps, Malaysia can position itself at the forefront of the transformation. Right? It could be coincidental, but we like to believe that our visit to the Parliament and talking to all these officials actually catalyze the actions from the Prime Minister's office. Then a month later in May, the Securities Commission of Malaysia published a consultation paper. You can look it up. It's 20251, number 20251, and basically Satori Research, together with Kenanga Investors, Helix, and also with Saison Capital of Japan, we contributed. So basically the questions that the Securities Commission had was like, oh, what do you guys think it should be doing on the tokenization's part? And so we basically helped to share our views. 3 months later, in August 2025, Project Juara was launched with Kenanga, Helix, and Saison Capital. So Mr. Ranjit from Kenanga has actually talked a lot about Project Juara, so I will skip that part. And amazingly, just last month, in February 2026, Kenanga Group launched the Malaysia's first tokenized money market funds. So I was together with the team in Tokyo, and it was a fantastic occasion. Yes, it may not be an amazing thing for most people, but this is a landmark. This is basically an important milestone for the country. So this is the part where I think, is very important, and which is actually should tickle the minds of the students here, and actually what inspired probably the people in the Parliament on 20th March 2025, 1 year ago. Why Malaysia is poised to become a leading digital finance hub. A lot of things we take for granted, right? We are Malaysians, and I studied my Sejarah Melayu, Sejarah Malaysia, Zaman Ketamaududan Melaka. I know this by heart. I know Parameswara came in 1402, what happened in 1511, 1641. And I didn't read this just before I came here. I remember it here. Because to me, that was the pinnacle of Malaysia back then, during the 1400 to 1500s. Why? Because of the strategic location. It is very unfortunate what's happening in the Middle East now, which I know most of us are following closely, in the Straits of Hormuz, where that's a very important choke point. The Straits of Malacca is exactly the same, if not even more important. 40% of global trade has to pass through Straits of Malacca. If you don't think that's important, I don't know what's important. That is the place where things get happened. During the 15th century, the East and the West, the Persians and the Chinese and the Europeans, they congregated in Malacca, in Malaysia, Malaya back then, to trade. But what's going to happen now in 2025 onwards is that all these resources, all these people, all these talents will start to come again to Straits of Malacca, specifically to Malaysia. It's already happening. Just 2 weeks ago, what happened in the Middle East, and I'm getting phone calls from friends, from investors. They want to move money, people, resources to Malaysia. Naturally, Hong Kong and Singapore are obvious choices, but Malaysia is beginning to get more and more and more focus. Mr. Ranjit from Kenanga has also talked about our supportive regulatory framework in Malaysia. We have two amazingly competent regulators in Securities Commission and Bank Negara. Robust infrastructure. We have advanced technological infrastructure in Malaysia, and there are certain things we take for granted. We think that, oh, Malaysia, we just produce chips in Penang, they are just suppliers, supply chain, etc. But I was pointing out my passport. The Malaysian passport was the first passport that incorporated the IC chip, integrated chip, which basically the first one out of 195 sovereign nations in the world. So now the other parts of the world are catching up. Then 1999, Singapore came in, 2005, it was the US. But what it shows is that Malaysia actually has a lot of technology advancement, but it's basically, we are basically under wraps. Skilled workforce. Yes, although our population is not that many, 36 to 37 million, but our workforce is very competent. We have a very diverse population here. Most people can speak a few languages, and we are well schooled in STEM, in the STEM subjects. And then we have a collaborative ecosystem where we have partnerships among universities, amongst institutions, and also with startup companies. And today's is basically a case in point where BAC, Unimai has got industry players, has got experts from the Sharia Islamic finance world together with investors to present this opportunity to students to understand and learn more about blockchain. So now we know that Malaysia is definitely going to be a leading digital finance hub. How do we continue to build? How do we maintain Malaysia as a leading digital finance hub? There are many things, that the government, that the private sector can do, but I've distilled to 5 points. First, we have to foster public and private partnership. The regulators and the financial institutions, together with the blockchain companies, have to work together. Nothing gets built in a silo, right? You can think, okay, Sunway Group is a big group, they can basically do things themselves. Nope. Even BlackRock, which is a 11 trillion US dollar company, asset management company, needs various vendors, various service providers, various experts to work together to build things. What else do we need to do? We have to enhance education and training. We have to develop skills. We have to have certifications. We need to have workshops. We have to have more sessions like this so that students and workforce and professionals alike will be aware, oh, this is what's happening. Oh, like today, for example, I learned many new things from especially the last two speakers. Because these, although I think I am an expert, having worked for 26 years in the industry, but there are still many new things, especially in this blockchain world. It is basically blue skies. It's green fields. We have to promote more research and development. Universities will have to work together with industry experts. This is where we need to create research institutions, right? So sometimes we have to start somewhere. It may not be perfect. It may not be 100% amazing on the first day. There may be bugs, like what Mr. Arsa was saying. They will just ship it out first, right? Ship it out first, you get the feedback, right? There's nothing perfect on day one. We cannot be perfect on day one, but we have to try. And then we need to build an innovation hub. So if you read the news, in 2025, June, Bank Negara built a digital asset innovation hub, right? So we at Satori Research would like to believe that we also catalyze the whole industry to do something. So we went to the parliament in March. In April, the Prime Minister made a massive announcement. In May, Securities Commission came out with a consultation paper. And in June, Bank Negara came out with a DAIH, Digital Asset Innovation Hub. It could be coincidental, but the thing is that in this world, everything is connected. So this is, again, I think this is a part where it's more important. So how the person here today, a participant, can contribute. As a student, what can you do, right? You may be studying engineering, computer science, law, anything at all. So how can you participate in this growing industry? One, you have to stay informed, right? Like, again, I would like to use Mr. Ranjit because I think we share a lot of similar ideas and slides, is that you have to stay informed, you have to follow certain web pages, read the white papers, follow the industry, right? Spend 15, 30 minutes a day to learn new things on the blockchain. You have to pursue relevant courses. Yes, you may be studying law, but it's important to know that, for example, the Islamic finance world is growing, right? So you can't be like, working in silo. I don't need to understand about Islamic financing. You need to. I don't need to understand about Islamic law. You have to. This is a field that is growing so rapidly. You have to network. Network means you come to conferences like this, join chat rooms where people talk about things that you're passionate with. If you're a computer scientist, you may be passionate about programming. If you're more like a trader, you may be interested in web pages where they talk about, in chat rooms where they talk about how certain tokens are evaluated. Yes, it may be speculative in nature, but you just follow your passion in this field. As a professional, what do you do? Like, basically, I talked to a lot of professionals, and what we do is we do industry collaboration. I would like to use this word again. Nothing is built in a silo, especially in this world. So as a lawyer working in blockchain, I get a lot of, I speak to a lot of lawyers working in blockchain because one, they need my input on whether a certain firm or certain project is valid, whether it's a scam, whether the technology makes sense. And the reason I'm able to provide that is we are, at Satori Research, we are involved in all aspects of blockchain and digital finance. Thought leadership, like what our leaders here today, the three esteemed speakers, were sharing their views. You may or may not believe, or you may or may not agree with what they say on certain aspects, but it's important to think critically and at times challenge them. And also for these professionals, we should launch and also support fintech startups. That's what we are doing at Satori Research, whereby we have our certain core businesses, but we fund new companies, new projects from legitimate, young, hungry founders. That's it. Thank you very much.
Mr. Tiong, oh, you already came down. Thank you again, Mr. Tiong. He is the CEO and founder of Satori Research. With that, our next session will be an MOU exchange ceremony. Mr. Tiong, I would like to invite again you on the stage. Professor Vic and Mr. Tile for the exchange ceremony. Okay. This collaboration is designed to strengthen the bridge between academia and industry, expanding student exposure to real-world digital asset and blockchain practices. May I also invite Mr. Ranjit Singh, Cik Azhar and Dr. Mufti to the stage for photos together with the panel on the stage, please. Okay, panel, remain on the stage. Take your seat on the stage. Let's bring back our esteemed panelists on the stage. Moderating this session is someone who has dedicated his career to the intersection of technology, leadership, and education. He holds a degree in engineering from the prestigious Indian Institute of Technology and has filed multiple patents, formulated technology roadmaps across both government and private sector. As Chief Technology Officer of BAC Education and board members of Unimi, he was instrumental in BAC Education Group winning the Malaysian Technology Excellence Award for 5 consecutive years from 2021 to 2025. He was recognized as Asian Top 50 CIO in 2019 for driving digital innovation in December 2025 and was elected as a fellow of the Academy of Engineering and Technology of Developing World, an international recognition of his engineering leadership. With that, ladies and gentlemen, please welcome our moderator, Mr. Tile Raj. Mr. Tile, I hand over the stage to you. Thank you.
Good evening, everybody. Thank you, Aziza. So we're going to make it quick because it's Puasa and the traffic is going to be a killer. So we'll do something quickly in 15 minutes. So please prepare your questions quickly. I have one question for them, that's all. And then the rest of it, I'll leave it to the audience. You know, if any question, there's a mic. Is there a mic for the audience? Yeah, there's a mic for the audience. Just put your hand up. We'll pass you the mic. Can you put on the one slide? I have this, my favorite slide, you know, I love this slide. I don't know if you've seen this You can see it on the screen. This is actually a book written by a guy called Salim Ismail on exponential organization. So if you look at the graph, it's interesting. It's typically how do you move from typically we have that straight line. You can see the straight line, it's moving up. But typically how you're going to move in an exponential manner. So I think that is key today. People just don't measure you today by your efforts. They measure you by your acceleration, how fast you accelerate the growth of your company. So the question I have for the panel, there are 4 esteemed speakers here from, all over, from industry, from advisory, from R&D, from different areas. How do you think we could actually use blockchain? Because in this part of it, I'm giving examples of companies in exponential growth, as people like Airbnb. They have no assets. Netflix, another example. It could be Uber. They don't own any cars, and they're growing. So I'm just trying to find out how will blockchain, the trusted data part of it, even in government, could be private sector, could even be education institutions. How do you make use of blockchain for us to get into this growth of exponential growth? So that's my easy part. I'll leave the tough part to the 4 panelists. I'll pass on the mic. Mufti, I don't know, you want to start first, and then you can pass it on. I should be the last. Okay, fine. So anyone can start. Ranjit, Tiong. But I think if you have any doubts, you can ask me. But that's what we are looking at, exponential growth.
No, I think in terms of exponential growth, we are seeing that in blockchain, right? So initially, there was, back in the years in 2009, 2010, people are looking at it more from the speculative perspective. And then they were thinking about, I can be a multi-millionaire. That was a time around 2004, 05. And then that got a lot of people into this industry. But now we are in a maturing phase whereby the exponential growth will come into real world assets, the real actual tokenization of assets, the real fractionalization of assets, whereby, I think Ranjit was saying, right now, if you want to trade government bonds, you have 50,000 to 100,000 ringgit. But now, if, with fractionalization, you can do it with $10, 10 ringgit or 20 ringgit. So the exponential growth will is coming in from all these new investor classes, potential investors coming in. And another thing would be the unbanked, which is about 1.4 billion people globally. They will be coming into this blockchain world.
So I think the unbanked thing is a very interesting concept. I'm just trying to understand a bit more. You mentioned, I think both of you mentioned it earlier about the 1.4 billion unbanked.
Yeah, I think you want to.
But then I'm just wondering, how do you get them into the ecosystem of this whole financial thing? I don't know, Ranjit or Tiong, you mentioned that. How do you actually fit in? Yeah.
So I think it's a very wide question, which I will answer in 2 parts, if you'll indulge me. As far as the underbanked population goes, yes, they are underbanked because they don't have one of several things. They don't have direct bank access. They don't have credit history. And these things feed off each other. Now,
no CTOS report or whatever, like in Malaysia, right?
Yeah, maybe not such a bad thing.
Okay.
But look, the power of the blockchain essentially means that you allow them to carry out these transactions without needing direct bank access. They need a phone, smartphone. We've seen live use cases in India, Indonesia, the Philippines, and this is one of the fastest growing segments in finance today, what we call private credit, where individuals who may not otherwise have had access to banking systems, and Dr. Yunus in Bangladesh started microfinance years ago. It's really about providing access and bringing these people into an ecosystem that doesn't necessarily have to exist within the traditional banking rails.
Okay.
So first part of that, your earlier question on how the blockchain can power this exponential growth. I think if you think of this in terms of what is the blockchain in the first place, it is essentially the transfer of information. Underneath everything else, you're really transferring, relaying information, and once you start programming these smart contracts, you enable functionalities. You enable automation. And because of the programmability of it, a lot of things that used to take much longer, sending out information, you used to have to send letters, then it became emails. Now the blockchain can enable this transfer of information. Record keeping, reconciliation, you needed to have transfer agents sitting down working out investor A holds 10 units, investor B 5 units, this is not just automated, it's programmed into the smart contracts.
Okay, okay.
So these are operational efficiencies, and finally now, because of this programmability, as the world of agentic AI starts to take hold, these two systems will start talking to each other. So you're gonna have AI agents carrying out all these back-end functions, being able to provide or program these smart contracts, and therefore your operational leverage increases a lot more.
So that's interesting. That's the emergence of AI and blockchain coming together. That's interesting. Yeah, Azhar, what about government? You know, I mean, how do you get exponential growth with this government thing? You know, because you mentioned there's so many, like getting a land record into physical things. So how will government promote this? I mean, Malaysian government actually.
I think it's more of a change of mindset. The most important concept that the government needs to grasp is the fact that decentralized ecosystem, government must be willing to relinquish certain powers that they have to back to the community. So if you're talking to the government today, it's not that they're not exploring blockchains, but they're exploring permission-based blockchains. Owned by us, only we can access, not the communities. So that's where the challenge is. So if government are willing, first move certain things, change the act a little bit, I mean, yeah, you have to take it to the parliament and all that, but at the end of the day, if you are willing, take that first action, and then from there starting to democratize the type of information that you have, and be willing to make it public. Not all information, only certain things that you regard most important. Like I mentioned just now, through cryptographic means, here you can still have the data being private. So with that, then everybody can have certain access. And with that, you enable new type. And they have the most, potential to grow, if you ask me personally.
So the issue is, what you're saying, it's actually they need to change their mindset to enable these technologies. I worked on Padu advising Rafizi, and I said, put the data on blockchain, and it was like, oh my, no way. You know, it had to be one database.
The concern is always, this data is private, this data cannot be shared. We're not asking for them to share privacy data. So like I mentioned just now, there's techniques today.
Your mic, I think it went off.
I mean, there are technologies today, the way that you can do it is you can protect the data without exposing a lot of privacy data. So, I mean, it just requires a lot of education. And like I mentioned, it starts not actually from the government of today, because why the challenge of government of today, a lot of them are actually old folks like you and me, and it's hard to change them. It's easier to change the new one, which is sitting in this auditorium, where they will become the leaders of tomorrow, and then start changing from there.
Yeah, I think as I discussed in my session as well, I would be more excited to see the exponential growth in terms of social impact. Unfortunately, we are currently in a time where all these powerful technologies are more used for the destruction of societies rather than to build the societies, unfortunately. For example, AI, thing we see. So I would be more interested to see how blockchain can influence the exponential growth in terms of social impact, not just revenues, not just values by numbers, and also in a manner that is more ethical. So all that comes from the mindset, as you have mentioned. And when we have that clarity in the mindset that where we want to go, if we really want to create that impact, a blockchain has definitely that potential. So that's how I see it. Thank you.
So the one question I have is, I think you know, a lot of this blockchain, and I'm sure Ranjit, when you did this Menara project, I'm sure a lot of it based on cryptography, where you store all those keys. Recently, I've been working on post-quantum cryptography, looking how to break keys using quantum. So I'm just wondering, I mean, Azhar, I think you're from a security background also. I'm just wondering whether going forward, you know, whether this is going to be a big impact, because we're already using quantum to break those keys. So will those keys now affect Menara You have all those stuff in it, all this financial records. Because I think, actually the next tech talk, by the way, guys, in May will be on post-quantum cryptography. So I was wondering, will that be impact? What we call it is harvest now, decrypt later. Because we don't have quantum yet, we are working on it. So we harvest our data right now, we keep it, and then hopefully when the quantum is ready, we will decrypt everything and screw you guys. That's what I think is going to happen. So I'm just thinking aloud, because of blockchain being based on all cryptography principles, will that be an issue going forward?
So I think there's two questions built into one. So the first question is, what's the effect of quantum technology towards the current cryptographic ecosystem that we currently have today? And obviously, quantum has an impact. But let me state it clearly. So the theoretical proof that says that quantum actually can break cryptography is only being mentioned in the theoretical concept. So there is no generic quantum computer today are able to actually break your current cryptographic ecosystem. So what does it mean by no generic? You have to look into the literature. There's a lot of literature based on that. But there's no generic quantum computer exists today. Not forget about the big size of qubit that you need, but there's no generic one, because one particular thing need to be done if you study quantum computers and how they break cryptography. There's something called quantum Fourier transform. And generic quantum Fourier transform in existing with the current quantum computers today, you cannot implement it yet. That's the first one. So maybe in the future there might be, so that's where you have PQC. So then the next question is, how do you mitigate this, right? You have quantum, hopefully I'm a big believer of quantum technology. We were part of that ecosystem previously, and I think one day will definitely come. But so there exists today chains that uses PQC base. So there exists today. It's not popular as the one that in the crypto side, but there already exists today. So you can use those networks of ecosystem with PQC and all that. If you really fear about your cryptographic systems today is going to be break by the quantum computers of tomorrow. But so they exist today, not a problem.
So for Ranjit, you were mentioning about the Menara system, which you have launched about 2 weeks ago. I'm just wondering, what for the kids here, for the students here, what skill sets do we need to develop? What should be our fundamentals? I mean, I can't be a biologist and trying to do. I'm not sure whether they can do that or not. What skills do they need? What do we need to develop so that even for Mufti, the same question for you, to get into all these various Sharia compliance systems, what skills do they need to have? Technical skills. You mentioned 15 minutes a day, whatever. But what do they need to do exactly? They have some fundamentals, right? Is it sciences? Is it arts? Is it a mixture of both? I'm not very clear. So I just wanted to get a clarification what they need to go into this industry.
One way to think about this is there is no otherness of the blockchain when it comes to the industries in which we operate today. I think 25 years ago, we were having this conversation when online banking and the internet started to come about. What skills do we need about the internet in order to do these jobs? The fact of it is, some basic principles do not change. The ability to understand, interpret law, the knowledge of finance. How do you think about interest rates, discounted cash flows, NPVs, etc., etc. Even operationally, how does money flow? How does value flow? How are these things created? So these are not abstractions. These are not two separate things that exist in different worlds. Unless you were to say to me that I want to double down on certain aspects of this. But they are highly complementary. So whatever your areas of interest are, I think that's very, very important. Some people like finance, some people like law, some people like IT, some people like being front-facing, talking to customers, etc., etc. So these are all very foundational, basic skills that go and keep studying them, and at the same time understand how the blockchain works, how that affects what you do. Because one is a knowledge thing, one is an operational thing. And they do go hand in hand. It's just like we don't need to learn the internet today.
remember in your slide you had I think you showed 6 boxes with some new professions. You call it DeFi guy, some DeFi, some, a few things out there. So I'm just wondering whether if I'm a law guy, can I get into those 6 professions you mentioned earlier?
Absolutely.
Okay.
One of the examples I cited earlier, and I spent some time with this individual 2 weeks ago. They are from Stellar. They are the head of legal at Stellar.
Okay.
Their background was from the US Department of Justice, and they were a prosecutor. Those fancy people you see on the TV shows that go and sue all those bad finance guys. She's not them.
Okay.
So background is one thing, but the access to these jobs really just depends on the depth of your knowledge in the blockchain, as well as in these very specific sets that you are interested in.
Okay. Well, but Mufti, what do you think? I mean, all the Sharia things, what do you think we could do?
Yeah, I think when we talk about anything in Islamic finance, let's say we talk about a bank or a fintech based on blockchain, we need different skill sets, from lawyers to accountants to risk management guys, compliance, everything, including branding and everything. So I think whatever the skill set is the students are interested in, the keyword is they must learn. You must, today the thing is, because of AI and everything, the students have lost the eagerness to learn.
We don't learn.
We don't learn. We think that AI is doing
yeah.
everything, I don't need to learn.
Yes.
That's the most biggest misconception of today's era. If you don't learn, then somebody who knows, he will use these technologies better, and he can do much better. I mean, we always think that AI will take the jobs. It's actually people who knows AI, because they know the subject matter, they will take the jobs of who does not know the subject matter.
Yeah.
So it's not that AI will automatically, of course there are a few things, we don't care about that, but otherwise it's about the people who will take the jobs. So end of the day, we need to learn. So when it comes to Islamic fintech, let's say based on blockchain, we need who can code, who can map the entire process, because they know how the business model works, including the operational aspect, legal aspect, financial aspect, and everything. And then we come as a Sharia government there. So I think when it comes to skill set, there is a diverse need, and everyone can fit in. We just need the subject matter experts. Thank you.
Tiong, anything from your perspective? So you're our new collaborator working with us. So what are you going to do to help these students to get those 6 jobs with Ranjit Chode,
Okay, I mean, like, if you are very hungry, you have great ideas, you can come to me, you can come to Dr. Tile, Professor Tile, and we can talk about how to fund your business. But, to answer your question, Professor Tile, I was in a webinar, I was giving a speech invited by AICB last week. It's Asian Institute of Chartered Bankers. So the topic was on digital assets and tokenization. So one thing I would like to point out is that, AICB has been doing this webinar, which is a paid course, right? So professionals have to pay to listen to a half-day event. So apparently, the topic was so popular that it broke the record of a number of participants signing up to pay to listen on the topic of digital assets and tokenization. That's one thing I want to make. Second, basic to answer your question, so one director of a very large bank in Malaysia, so she's a very, very senior director. So it's just like, with all this thing going on, right? And she's a very old horse, right? So it's like, who will survive? What jobs will ultimately be available, will be left, right? What kind of people will be able to last? So my answer is very simple. It's actually you have to evolve or you will be extinct. i.e., you can be, there's new jobs coming up, except that, in the blockchain world, you could be a legal officer in compliance, you could be confirmations and settlements, you could be a lawyer, you could be a trader, asset manager. But you need to work alongside with these blockchain technology, the new law, smart contracts, AI, so that you will evolve. Otherwise, you'll be extinct. And the third thing is that I was using my own example. 25 years ago, when I started my first job on the foreign exchange trading desk in Japan. So they were they were hiring 20, 30 traders a year, right? It was foreign exchange, people changing money, buying ringgit, selling dollar, buying rupee, selling taka. So that was my job, right? And buying and selling. they were hiring 20 to 30 traders a year. Fast forward to 2012, basically the desk is only like 3 or 4 people traders left. In the old days, you need a lot of people. But then we're not talking about even blockchain technology. If I had not evolved, I would be extinct. So basically, you have to move up basically the ladder of evolution. You can't be sitting on your spot and hoping that the work is going to be there all your life.
Okay, that's interesting. I think I won't make it. It seems to be quite tough. Thank God I'm old enough, so I don't worry about it. Okay, anyway, let me leave it to the audience. Okay, we can take 2 questions because we go back, traffic jam, need a buka posa. So any 2 questions from the audience? Anybody? What is it?
Hi, my name is Osama. I'm from Unimai. So my question is to Mr. Tong. You talked earlier that you need the government and the government to adapt that blockchain. But some of the apps that you mentioned, like Hata, I have used it personally last time. If you remember the WorldCoin when it was famous, yeah. But now it's no more. I don't know what happened to it. So my question is, you say that the government to adapt these kind of things, and these things have been happening for a long time. But including my country where I come from, also Syria, we want to see these things happening in Syria, in a lot of countries, because I think cryptocurrency is kind of the future, especially when we see now the war is happening, and a lot of currencies are floating on like dollar, Malaysian ringgit. It was good, now it's gonna go bad because of the war. So do you think really, is it possible to see in the next 5 years, 10 years that in our daily life transaction that we're gonna use cryptocurrency? Do you think the government will accept this kind of things, or is it impossible?
Thank you very much for your question. And I think on this particular topic, I can talk for hours because I'm very passionate about money. I'm passionate about things, when it pertains cryptocurrency and commodities. Long answer short, I think the answer is not yet. 5 to 10 years is not possible. And given that I'm a believer that the US dollars or the other fiat currency, so to speak, will ultimately converge to zero. You will need an actual commodity, an actual asset. And in my view, it has to be some sort of a gold or silver. You can't basically, and US dollars until 1971, and again, previously a US dollar was backed by gold. So you can take a US dollar, you can go to a bank, you can convert it to a certain amount of gold. But after that, basically in Nixon, he basically cut off that window. So a US dollar is backed by trust, right? So you trust US dollar more because the government is bigger, blah, blah, blah. But now what is happening, unfortunately, in the Middle East, and especially since 2022, when US dollars was used as a weapon against other countries, I think it will converge ultimately to zero. So to answer your question, no, but it will come in possibly in a form of a basket of currencies, for example, which is backed by BRICS, Brazil, Russia, India, China, South Africa, or some sort of a consortium whereby they say, you know what, 50% is gold, 25% is silver, the other 25% is kelapa sawit, I'm just making this up, right? So it has to be something tangible.
Okay, any last question for the panel? Yeah, somebody's got a hand up there.
Thank you very much. The question is directed to Satori. Yes.
You're the famous guy.
Yes, yes, yes. So the question is, looking at what you mentioned about research, incubator, and also investment for SMEs, just trying to combine that with what Mufti Dr. Yusuf Sultan mentioned about Islamic FinTech. With regards to your company, do you have any plan maybe for SMEs or for maybe upcoming young people who are hungry, like you mentioned, who have something they want to do in SMEs for Islamic FinTech? Do you already have something, or especially for SMEs that is already operating? Are you able to take them up or attract investment or even incubate them? Do you have anything?
Again, the answer is yes. And the very reason why in Satori Research, we are like, never heard of you before, right? Yes, Kenanga, we know they're the biggest, the most aggressive investment bank in Malaysia, independent investment bank in Malaysia. Maybank, yes, we've heard of them. Satori Research, we've never heard about you before. The reason that, we don't, what we do is that we don't advertise ourselves. But what we do is that, we work with large companies like Kenanga. Together, we do some JVs. And also, we have been investing in, for example, startups. In Malaysia, for example, we invested in CoKeeps, which is a digital asset custodian. So we work together with the founders. We understand the pain points because I've been a founder before, and I've had my, equal number of losses and gains. I know how things work out sometimes. Sometimes things don't work out. So we share that. So yes, I'm happy to work with founders that share the same type of vision on growing certain aspects of market that we are interested in. So through these collaborations with, like, for example, CoKeeps, and another one is Helix, which is the infrastructure provider for Myra. We have worked with them for a while, and actually Satori Research, we have invested in one of their earlier rounds as well. So we have skin in the game. So we want to see them succeed. We want to see the founder, JJ Jitendra, to do well. So for us, it's basically no conflict of interest. It's just that we have skin in the game. We want to see you succeed. So if you have an interesting project, you can always shoot it, our way.
Just to add a little bit, if you really want to start a journey as a startup to this ecosystem, start participating in trade shows, conventions, and all that, Web3 convention per se, because you will see a lot of angel investors and all that are part of that ecosystem. Within that community itself, I've been through some of those. They really, really support the Web3 ecosystem. We know an entity, so what do? So they have, they partner with a durian farm in route to tokenize durian trees and all that. So there's a lot of people doing work in this area, and it will be funded. There will be some interest in other parties that be part of that community, joining trade shows, conventions, and all that. So there's a lot of blockchain conventions happening around Malaysia. Probably the two bigger one, I think the Malaysia Blockchain Week, and then there's one more, if I'm not mistaken, I cannot remember what it is, but organized by different organizers. But I encourage you to join, because you will see a lot of that community. They also working with other communities and then seeking funds from various investors around that ecosystem.
Okay, I think we are running out of time, and I'd like to thank the panel. Thank you very much, and thanks audience. Great questions. Thank you very much, everybody.
Thank you, Mr. Tile, for sharing us through what has been such a precision to our 4 panelists. With that, we move to the final moment of thanks. May I invite Professor Dr. Vic to the stage to present the token of appreciation to our speakers. Okay. First speaker, Mr. Ranjit Singh Gill. Thank you. Mr. Azhar Abu Talib. Dr. Mufti Yusuf Sultan. Mr. Tiong Henge. And Mr. Tili Raj. Okay, let's gather for a group photo again. Thank you, everyone. Ladies and gentlemen, we are approaching the end of today's formal program, and what an afternoon it has been. Such an insightful presentation from all our esteemed speakers, and we would wish to invite you guys as a guest lecture one of these days. To all students and participants, thank you for attending our Tech Talk event today. And our appreciation also goes to student volunteers, SRC. Thank you so much for assisting. To the corporate com and creative team, thank you so much. BAC Learn team, the facilities team, who has helped organize today's Tech Talk event. On behalf of Unimai and BAC Education, thank you again for being here. We wish everyone safe journey home. To all Muslims, selamat berbuka and selamat Hari Raya, since Eid is coming soon. Thank you and have a great weekend.